Check 1 2, mic check. You can hear me? Check 1 2, mic check. I had Binky just said something about I'll get kidney stones if I don't. I am high. I do stay hydrated, but he said take pee breaks, and I don't take near enough pee breaks. Nowhere near. Do SPX. Good morning out there. How are you all doing? What's going on, Juan? How are you? Good morning out there. All right, so we have a lot to go over this morning. Yesterday, we finally got a little bit of a pullback in the marketplace. We traded, we had a pullback to close to the daily trigger, but not quite as low as I'd hoped. I would have liked to have gone down a little bit more. Maybe gotten underneath the daily trigger. I don't know if this is the only pullback that we're getting, or if we're going to continue to the downside. I would like to see us go down more. I would like to see us correct to the weekly trigger if possible. We're going to look at that this morning. I don't know if that's going to happen though. We'll look at it. But also Tesla yesterday had a great, it was weird. Yesterday we watched the Tesla ER, and Financial Juice said they missed. And they didn't miss anything. They did very well. And we're going to probably talk at some point today about the Trump, Elon Musk, Tesla trade. If Trump wins, if there's a red sweep. I did look last night. There was an election where all of the forecasters forecasted a red sweep. I haven't dug deep enough into it yet. I believe it was 2012. But at any rate, I was digging through. It's really hard to find. So what I did was I went through last night and went looking for pre-election Wall Street expectations and polling expectations. What was the thesis before each of these elections? They don't like making that public afterwards. It's or it's hard to find that stuff. What was the overall expectation heading into an election, and then its impact on the markets? I found one. And I was in a discussion last night with a guy who knows a lot about politics. I don't know a ton about politics. Some of these guys are fact-spitting regurgitation machines on elections. But
BCF, build
we're going to talk about Tesla today at some point. We're going to talk about the ER and cheaper vehicles. That's all good stuff. All that stuff is what I want to see. I don't care about fucking robots. Not right now. I don't think robots are there, but I care about cheap cars. I care about more cars, that kind of stuff. I also care about the Shanghai factory, all that kind of stuff. We'll talk about it later this morning, but we have to take a look right now at. Let me see if I can bring up the brief from last night. Just a note here too. I'm trying to get long. We'll go over it right now. Hold on here. Give me one quick second. And I'm going to explain some of this to you guys here. So I've been in middle of September. Give me a second here. Let me open up the brief from last night. Hold on here. Let's go over to the trigger screen. Okay, so in the middle of September, right? We did have a pullback in September. Where's September here? Let's take a peek. Yeah, so we had a pullback on the 30th. Right in here. We had a pullback right down here into September 30th. I put on a ratio spread for January 15th or 17th or something like that, in here, with an expectation that we would drop again in October, maybe like the 31st until the 15th of November, somewhere in there for election volatility. We haven't done that, have we? We've continued higher. I still have that trade on right now. As a matter of fact, this low right here, I was mentioning this yesterday. This is right where I put that hedge on. I literally top ticked that shit. And yesterday I was looking at my hedge. Like, I need more down for that to print. Fascinatingly enough, though, we're not lower, are we? We're not lower than, like, currently we're not lower in October. It's October 24th. And we are not lower than we were in September. And this is important. We have to talk about what makes that important. We have a zone of trading up here, right? We've got this. Let me just get rid of all this. We have this zone of trading up here. It's somewhere in here. You can see like the buyers are here, right? Up here and all that kind of shit. Then you get your sellers up here.
Brent and U.S. oil futures turn negative.
You could say they were
a barrel.
Say like right about there. And let's take a look at this really quickly here. So let's remember September, okay? September is important over here because I think I put my hedge on. It was somewhere up in here. And the way was higher, wasn't it? The way was not lower. Let's look at this one down here. That's the low in there. So let's look at like prior history, right? In September, we're consolidating, and you really are looking for a break. Get underneath. Does it make sense? Like, get underneath this range-bound trading so that we can, in October, make new lows.
Says
that didn't happen, did it?
Make it all the more important.
And yesterday,
initiative measures.
We get a pullback, and we raced back up into this zone again, into the close, and then this morning when we opened, and we're back in that range again, aren't we? So this is a half a day. I think we were down yesterday until 1:30, something like that. 2 o'clock maybe in the afternoon, and it was a race right back up again. So who is this? Question mark. It's these buyers over here. It's whoever these buyers are that pushed us back up. You can see this is their instigation right here. And you're not looking for these people to be here still. You're looking for a correction or a corrective movement or a pullback, or this is the top of the market, or I don't fucking know. Whatever nonsense is being spewed out there. They've been spewing it for like 3 weeks. Like market crash, top, Matter of fact, I've been doing it since February, right? And I read a paper this morning that said Rocky October. I read a paper this morning that said Rocky October. Let me show you what a Rocky October is, okay? Let me just show you what a Rocky October is. I'm just show it to you really quick here. Let's not fake ourselves out here. Let's take a look at the start of the Rocky October, okay? Watch this yellow line right here, just the yellow line. Pull back, 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 pull back. Pull back, pull back, pull back, pull back, pull back. Correction, that's nice. I like that. That was actually a kick-ass trade. But here, let's continue on. Pull back to the yellow line. Pull back, pull back, pull back, pull back. Pull back, 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 pull back. Correction, that's nice. Oh, God, I love those. Pull back, pull back, pull back, pull back, pull back. Correction, love those. Correction. Look at how recently those were. Correction, correction. Pull back, pull back, pull back. It's a lot of fucking pullbacks, isn't it? And it's a lot of fucking pullbacks. And what does that pullback count, or does that pullback mean? That pullback means that we traded up. Whoa. You ready for it? You ready for it? 73% of the value of the S&P 500. So there's a couple things to say here. One would be, give me any pullback you can. Two would be, we're not down 73%. And the third one would be, any kind of correction you can give me that too, right? Anything you can give me to go long, I will take it. Just off the cuff. And they've been calling for this crash since, what, February of this year? I remember it. They've been calling it since then. And if you were just to stay long and get long, you would be fucking filthy rich, right? Let me say it again. Fucking filthy rich. And I don't talk about that a lot, but I should talk about that more. And the reason I should talk, Mickey said I should talk about this morning, and the reason is last year in Q3 and Q4, I was exiting the market on reports. Any good reports I had, I got out of the market. I missed out on about $250,000 into the end of last year. And I, to this day, kick myself over it. I got scared out of the market. And I'm thinking about that right now, too, which is since mid-September. Let's get rid of this here. Since mid-September, I've been pretty much flat. I've been trading like zero dates and stuff, but I've been very cash rich and hedged in here. So I'm like in here hedged, right? And I'm day trading this stuff up, right? Day trading all this crap here. My hedge has not paid. And we have not pulled back to anything significant. So no pay on the hedge. And no joy yesterday. So let's look at this again. We have a prior example. And this would be yesterday, wouldn't it? This is pretty much yesterday, right? And the question becomes, what's the narrative this morning? What was the narrative last night? Was the narrative be getting long in here last night, or was the narrative doom? You know, and that's the big question. So, and what am I looking for to get doomy in here? I'm actually looking for the break of the daily trigger, you know, the pullback, and to get short meaningfully. And there's a lot of room there. I want to show you an actual correction here too. A big one, right? You got this like big move down, a little bit of liquidity, and you can get really vicious with the pullbacks, right? Or from a pullback to a correction, you can get like slam it down, right? And here you go. You got people saying, well, I'm not going to get, I'm not going to do this. I'm not going to do that. But, the whole way up, they've said the same bullshit. And they've gotten smoked the entire way up. So, and even with that, you could literally just stay on the sidelines and still have just waited for the next pullback to go higher and higher and higher. You actually don't even have to short this stuff. You put a ratio spread on. If we blast down, you're still just there looking for end of year. And that's the key point here, too, is we still have December 31st in January over here. So the look is higher into 620, 600, something like that. So whatever dip you can get me there, either here or down here, it doesn't really matter. It's just buying dips. That's really all it is. And let's go further with this. So let's go a little bit further here. We're not done. So this should be used as some kind of an opportunity to get long, not get short. This is like get long kind of stuff. There's a matter of fact, when we're day trading all of this stuff in here, it's like complain, whine, complain. You hear me complaining, right? I'm buying like 0 dates and they're just burning all day long. Then they fucking print them at the end of the day. And we finally get a dip buy and you want to get long. That's what you want to do. Get long. And I did. I got burned some calls yesterday, some 0 dates, but I also had some calls that I printed on the open this morning. And now I'm trying to get long again right now. I actually put on some call spreads too. I got some, fuck do I have? I got 600 620s for January 17th in this whole entire mix too. So I got a bunch of call spreads down here. Do I really care though if we roll down? No. I actually don't care if we actually went down here and then went to 620. But I don't want to be left behind either to get to 620. If we don't ever if we don't ever do any of this pullback over here, I can't be left behind. I don't want to be left behind. I was left behind last year. We never got that pullback last year. We just went up. Like we literally went up into the end of the year, and I was sitting there going, fuck, I'm out of all of these stocks that are super low risk. I mean, this was stuff like Budweiser and like SPY. And I got left behind, right? So I don't want to be left behind in the end of this year either. Now, those call spreads can look like dog shit, right? If we roll down here, they're going to look like ass, but they will print into the end of the year if I can get above the 6,000. December 31st, January 5th, whatever the fuck it is, we go up in here, and I can print all those calls. But your thesis here is that we're getting long. It's not that we're getting short. And why is that? How do you know that that's what it is? How do you know we don't crash here? And I think I've told this to you at this point ad nauseum how you know. And what corrections look like and what crashes look like. If you have the daily trigger, or if you have a pullback without the daily trigger rolling, so you see how it just keeps going up straight? See how it dips down right here? That shows a correction, doesn't it? If the daily trigger goes down with a correction, like it actually comes down, that implies that that's the top of the market, right? Or at least not even a correction, but a major correction to the monthly trigger at minimum, right? If you start to see the weekly trigger rolling over as well, that can be a sign of market top, right? But we're not seeing that right now in the weekly trigger. We're not seeing that right now in the daily trigger. Even if we pull back, or not pull back, but correct, even if we were to go come down in price, but the daily trigger does not follow, that just means we're getting a correction. Not even a major correction, just a correction, and we head higher. Make sense? And I'll show you an example of this if you want to see a top of the market. Here's the last one right here. You can actually see a difference. You can actually see a difference. See how that daily trigger crosses? See how that daily trigger does not cross anywhere else back here? And until you see that, you can't really be a top caller, can you? And even when you get that daily cross of the weekly trigger, they still give you an opportunity to get out, don't they? See how that was the top, and they still gave you an opportunity to get out of the market and exit in an orderly fashion. So let me come back over here and show you that. So let's say this was the top of the market. Let's say we blooded down here. We blast all the way down here. Let's say it's all doom and gloomy. And you get let's pretend that the I don't know, the fucking weekly trigger's up here. And the daily trigger actually does cross. Whoop. They're still going to give you the chance to get out. They're still going to bring it back to give you the opportunity to unfuck yourself if you need to. And I have a case in point on this too. Starbucks. You had McDonald's go down and Starbucks go down. I've told you this before. Whenever anything happens in the market that's not known by market participants, not you and I, but like funds and stuff, they bring price back almost immediately. If they were already short that issue, they won't bring price back immediately. But if they are not positioned for it, it comes right back. I told you a famous story about was it TikTok and Microsoft or something? A CNBC reporter leaked on air. He was like wasn't on the street. I think he was at like the exchange or something, and he's like talking about a deal between Microsoft and TikTok, and the host on CNBC said they don't know that publicly yet, and the stock mooned, and it became public. What I found fascinating was the hosts of CNBC knew the deal was on, which pissed me off. It wasn't public yet, but people on the street kind of knew, or at least people in the know knew. But you and I didn't know. Microsoft mooned. The market wasn't positioned for it. I sold that moon, and they brought it all back. They brought Microsoft all the way back down to where it squeezed. And then they dumped it, got long, and they ramped it back up again. So like Wall Street was able to get in on the trade. And Starbucks was like that, I think, yesterday or the day before. Now, what do we have to talk about here? This is from the brief last night that I discussed. I've discussed it twice now, I think. I think I discussed it the day before on stream, and then in a brief yesterday. No, discussed it in a Discord yesterday. And I want to go through it today and what it means. From the brief last night, I had said some specific things. And I want to show you what I'm talking about. I'm going to give you a prime example right now of what I'm talking about so that you can be aware of it and what it looks like. So if we pull back to the daily trigger, right? Price should stay on the hourly trigger and make a series of higher lows, and the run should not stop until we make a new high, all-time high, believe it or not. You can see it right there. If price does this, there is no correction. We move higher, okay? If we roll down to the daily trigger, whoop, and we fail to get the new high, and we break the hourly trigger with a new low.
That's 11 a.m. Eastern time.
We will go below the daily trigger, and we will begin the corrective phase of the market.
City Fed manufacturing.
So two different situations. Now maybe now you can see it.
Comments from
McCall. And these are very important to be watching.
2024 IIF.
Like extremely important. about 95% of the time, this matters. This is a market edge that does matter. And so when you're watching where we are right now, there's a few things we're looking for here, isn't there? You have the initial low, right? And what I didn't like about this low yesterday was that I wanted to see the break below. I wanted to see these buyers here. I wanted to see these guys right here and these guys not show up. Like we break below those buyers, even if we squeeze, come back down and get down there. Because this shows that these buyers are no longer here. They're gone. This demand is gone. Sentiment has changed. They're no longer buying, you know, and you need to see that. So we didn't see it yesterday, right? We did not see that yesterday. We saw them step back in again, and now they're going to close the gap, right, and check once more to see if they're here. If they really are here, the way is higher. Still higher. I know that sounds crazy, but if for me to get bared up, I need to see the gap get closed and a new low down here. That's when we can get super bearish and super like we're going to go down. And we're hopefully going to go down and trade at least the weekly trigger down here. Currently, it sits at 544.73. Now, in the defense of selling, we have some positivity in selling. And that is in this daily velocity. We are losing velocity on a daily basis. Does it mean that it goes down here? Not necessarily. You can see right here we went down just a little bit, right? We can actually go down just a little bit more and go back up again and keep pumping. But this is positive for sellers. This declining daily velo on a 30-minute basis is positive. Now, you might be like, Cap, that was top of the market. We're never coming back. And I would argue against that. And I'm going to explain to you right now. On a weekly basis, we're actually going up into the end of the year. On a monthly basis, we're actually going up into the end of the year. On a quarterly basis, we're going up into the end of the year. And I would expect a top in the market once these three specifically roll down, and prices going higher. When you get a divergence in weekly, monthly, and quarterly velocity versus price, that actually signals a market top. It shows that you're being left as a bag holder while major players are exiting in the background. Whenever we see this on individual tickers, we can project that that stock is going to crash. Same thing applies to the stock market. So there's a few things to see or know here, isn't there? There's the idea that we're losing daily velocity, right? There is potential for a pullback.
So Kansas City
Not a pullback, excuse me, a correction down to the weekly trigger.
-4.
Is it bearish like top of the market? No, not at all. Is it guaranteed that we go down to the weekly trigger? No, it's not. It's not been confirmed yet. We need to confirm it. If we close the gap and go higher, all right, the way is which way? Up. Make sense? So let's take a look at something important here. Let's go look at SPX really quick.
Kansas City Fed
and Gamma.
Prior -18. We also expect
So let's take a quick peek and a little stroll over here. So
at the 2024
some fascinating stuff happened yesterday. We didn't have a lot of gamma in the market, right? We came down. If you looked at the gamma picture yesterday, there was nothing below, zero. It was just open air. Blasted down below, and we created some
Protect your
puts
trades from macro headlines.
gamma that matters.
Now only $99.
Nothing below it yet. It'd be nice to have some more down here. This really isn't. It's productive, but it really isn't enough. We've got local support down below here at 57.80, even though it's negative gamma. And matter of fact, the put. Well, sorry, hold on a second here. One quick second here. This is a misnomer here. Hold on. Yeah, local support right here. And this is kind of like your put wall right here. Yeah, I got that right. This is your put wall at 57.75. This is bottom of the market for gamma that matters right now. Can we get put wall lower? Yeah, of course. We start blasting down here. We'll make this gamma more important down below. But for right now, even in negative gamma, the put wall stands at 57.75. Local support is at 57.80. And the gamma flip, we're above it right now. The gamma flip actually moved up yesterday. More important information. And we have a gap down below here, right? So if we can get price slightly lower, what can happen? We can move, can't we? So if we can come down here, whoop, move down, close this gap right here, and swing higher, we're rock and roll, aren't we? No new low, series of higher lows, hourly trigger rolls higher. You see it? And we're off and running to the upside. Make sense? Now, if you are a bear, if you're like doomed up or whatever, what do you want to see happen? You want to see the gap get closed, right? Close this gap down here, right? And what else? What did I tell you yesterday? The buyers were here from over there, right? You want these buyers not to show back up to buy the dip, right? So they're the buyers. They should be right here, shouldn't they? So if we're going higher, stretch down, go higher, rock and roll, right? If those buyers don't show up, what should we see? Sweep lower, blast down, and get that new low, right? Squeeze back up. And what are we doing? Sellers are actually now in control. Does that make sense? Now your sellers are in control, and we can get a correction to the downside. But until this happens, until we get like down here or we get up here, the buyers are still here. I have to impress that upon you that as far as we know, they stepped in, and you would expect them to step in no lower than right here, 57.80, and more than likely, they're going to step in on somewhere in this gap closure. The expectation is that they're right here,
From ECB.
here or here, right on 5,800, 5870, somewhere in that area to go higher. So today, tomorrow, into next week, there's some other shit here too. I'm going to talk to you about this too. I want to show you one other thing here. Oh, wrong one. Hold on here. There's some other problems here. Traders rolled their, here's 590. And I'll show you some gamma here in a minute. Traders rolled their calls higher, too high, but they didn't roll them high enough.
So the US to sell $72 billion in 26-week bills on October 28th to settle on October 31st. The US sell $48 billion in 52-week bills on October 29th to settle on October.
Traders rolled their calls to like 590,
3-month bills on October 28th,
600.
31st.
We get a pullback on that.
Finance Minister Reeves.
But if you want like blood,
debt in the next
you need traders buying calls at like 610, 620, 630.
$44 billion.
If they buy these calls here, we can roll down to like the weekly trigger, maybe even the monthly trigger.
In 2-year notes,
we need more call development up here. When we don't get that call development, we can't trade that. And we can't get meaningful pullbacks. You can get pullbacks, and you see it in the gamma right now. We have like gamma down below now at 5750, 5800, and shit like that. It's still not enough to we'll do this shit. We will like literally ping pong. The only other thing I could think of here would be if the election volatility rolls off and let's say we're still ranging in here. Traders start looking for end of the year and start buying 630s and 610s and 620s. We can actually go down then too, as long as they're buying this crap up here. But right now they're still not buying. We still don't have that development up here. And what that does too is it does two things. It allows an actual correction to happen, and it allows us to trade up here into the end of the year. Right now we can only trade 600 end of year at most, like 590, 600. We don't have any gamma up here to trade 620. And you need to trigger that gamma. You need to trigger that call buying, even if we're going to blast down to swing higher. So we don't have it yet. That's all I got for you in that stuff. At any rate, watch this closely. Note that we've done this some bazillion times. Let me show you another area here where we did correct, right? We got this nice little area right here. We'll put that right there. And we got this nice little area of consolidation or distribution right here, right? And what do we have? Come up, come down, back check, and we dropped below, right? If you want to see that, what are we looking for? Same thing. We're going to be looking for squeeze higher. And you want to see that blood. You see that blood, right? Just get up in here in this half an hour trigger. Hold on here. That's not really gray enough. See that half hour trigger? And you start teeing off like there. And we'll start getting some nice lower lows. Bam, back down there. Bam, back down there. Bam, down to the weekly trigger. 1, 2, 3, and you can get meaningfully short in a meaningful way. That's all I got. I think that's all I've got. I think I was trying to explain what it meant to, like, do we go higher? Do we go lower? Are we correcting? Are we just pulling back? All that kind of stuff. As of right now, no. I need to see more. So let's look at one last thing down here. On a 1 minute basis, where's that gap? There's a couple places we're going to look at here. Let's look at a couple places here. 232 yesterday. Let's get rid of all this. $232. Oh, that's the daily trigger. 1600. It was 1600 yesterday. Right about there. $1,600 right here. That one right there. Oh, you guys can't see this shit. Hold on. Sorry about that. I'm just marking these out here. Here's one band right here. Here's your second band right here. Right about there. Right about there. Let's see if we can get long again today. Here's the targets to get long. This is from the gamma picture that I showed you down here. This is the first place right here. No, this is the gamma flip right where we are right here. Hold on here. I would say that this is not a dip buy. I would not be buying the dip here in this gamma flip. So look down below in this chart. You should see this is the gamma flip. All right. I guess you could if you wanted to, but I'm not getting long here. I'd like to see price improve. I would hold on. If I was to get long in the gamma flip, I'd like to see price come higher. I'd get long somewhere in there, but I'm not interested in this. I want to see us get a little bit lower. I'd like to see us get at least down here, but more importantly, I'd like to go down there. This is where the buyers were yesterday, way down here. Well, they were lower, actually, but I think they're either here or they're right here. Okay, and so this is where the gamma flip is down below. This is where those two gamma bars are. That translates to these two green bars, these ones right here. That local support, bottom of the market. Let's see if we can show it to you here. This is the put wall. Put wall right here, bottom of the market, our local support. And gamma flip is right here. And finally, we get some movement in the market. Finally. I think that's right. I think that's wrong. Now let's look at the 30-minute velocity. Higher lows on Vel. This is good. Good improvement here. Might actually get a rip off this. That's all I got. I think that's all of it. Sorry for not being on this morning, too. I had to sell some calls on the open. And my oldest daughter's in like college, high school. And she doesn't like the she's got a lot of stuff from when she was a child and like pre-teenager that she liked. And she never liked the things that I bought for her or I wanted to buy for her. And I used to tell her, I would be like, I would be like, do you want this Nalgene bottle? I'm going to buy a bunch of them. And she'd be like, no. She'd be like, I like the lead-filled Stanley cup thermos thing. And I'd be like, you sure you can use this for the next 20 years? And she was like, no, daddy. So I'd get her all this like crap. Same thing with backpacks and stuff like that. I'd offer like a North Face or a Jan Sport backpack, and she wanted like the cute little, I don't know, pink whatever, purple whatever, powder blue whatever. And this weekend she was out buying some kind of shitty stuff for college, and I caught her this morning. She stole my. I have this like cute little blue Nalgene bottle with a brown lid on it, an orange little strap. She had stolen it from me, and I saw it, and it triggered a memory of telling her she would want that stuff when she gets older. So I said, you can keep it, it's yours. And then I dragged out a bunch of stuff for her that I own for myself and gave it to her. Like, give her a nice, I have a travel North Face backpack, airline travel backpack. It's expensive as fuck. It's got like padding in it for a laptop and a bunch of portable monitors, so I can have like 5 monitors set up with a laptop and trade. So I gave that to her and a bunch of other shit that I had a bunch of crap for like office stuff. Nice expensive pens and some mechanical pencils and stuff. And so I had to drag all that out for her. And I was like, here, you can have all this stuff. It's kind of like camping gear and hiking and backpacking gear. They take all your shit. Like, they don't want nice shit, but then once they go to college or high school, like older high school and college and stuff, and become young adults, they realize all their friends have this expensive, cool shit, and so they want it too. And I don't really want to go out and buy new. I've got all that. I got more than just that. I got like a bunch of crap. And I'm like, here, you can have this one. I thought about you years ago. You can have this down. This is a one we just did recently. We just did a bunch of backpack and tent shit because she wants to go to like music festivals, and I have like, like Cuban fiber tents, and like I got this like little instant 4-person festival type tent, and squeezing, and and I was like, here, you can have all this, like, take all this stuff. I'm like, you can have this. I was like, take this nice little sleeping bag with you. It weighs nothing. And I was like, you can have these 2 tents. We're like packing shit right now. And I'm like, I got a bunch of boxes, like plastic boxes, and then we're labeling them, who owns what and whose stuff is this and that and whatever. And I'm like, this is all yours now. And like, when you go to your summer music festivals next year, this is your stuff, not your cute little polyester, whatever, pink, purple, light powder blue. There we go. Almost a near perfect tag. Look at that. Amazing. That's right. Squeeze them out. Squeeze them all out. They think we're crashing here. I already know what the fuck is going on. It's like same stories, same fucking stories. Rocky October. I'm like, get the fuck out of here with that Rocky shit. Fucking been Rocky since fucking October 2022. Been by the fucking dip or going up. Fucking crash. Some of the shit I read, like I've been reading some stuff, and I'm like, dude. And then Vic's like, I gotta show you guys some stuff. Like, I got a whole bunch of stuff to show you guys. So like, here, I'm gonna show you Vic's 9-day here. Like, just let me show you the insanity. Insanity and narratives. So this is Vic's 9-day, right, from yesterday.
Fed bids for 4-week bills total 200.
Vic's 9-day traded 1875. I hope it gets to $20. This is where I want it to go if you want to look down here. But let's get down here and look at this for a second. Let's look at the VIX 9-day. Okay? Like,
do you want to
go get yourself a makeup mirror.
Non-farm payrolls?
I know you guys have makeup mirrors. All you men, you have no girlfriends and wives, right? That means you gotta like
for the price of
you don't have a woman at home taking care of yourself, right? Taking care of you for yourself. I want to show you guys something here. So you guys probably own makeup mirrors. Let me show you something here. You see how high the VIX went yesterday? The VIX 9-day yesterday traded $18.66, right? See that? Where did SPY close yesterday? Or where did you wake up to SPY at this morning? Tell me, where did we wake up this morning to SPY? We woke up to SPY this morning at 581.20. 581.20. Where's all-time highs? All-time highs what? 586? $4. And we had VIX go all the way up to 18 bucks. Are you telling me that we could get the VIX to $60 and be down $15? What are you telling me here? Are you telling me we could trade VIX up to $80? 60. I'm trying to figure out what you're telling me here. We can go to 60 bucks and be down 15 bucks. Like if you're gonna get the VIX up there, I want fucking lows. I'm like a super permabull, but I'm also like, if I'm gonna get bared up, I want some goddamn down, and I want it to hold. I don't want retraces. I don't want like squeezing back to 580, 581, 582. This is why you can trade VIX and you don't get bared up on S&P 500. The S&P 500 is resilient. You can trade vol, but you can't always trade SPY, can you? Like SPY is like, fuck you, we're going back to fucking 582, right below all-time highs again. So, yeah, can you get the VIX up? Fuck yeah, you can. But does it necessarily translate to doom and gloom and crashes? In this case, so far, the answer is no. So even the behavior of SPY is not conducive to this is the top or any of that kind of shit. Let's look again. Let's if you have VIX 9-day at home, if you don't know about VIX 9-day, I love it. I like it a lot better than the VIX. There's some other ways to look at the VIX. You can divide VIX by SPX, and that will also give you something similar to this. What I like about the VIX is it gets reset every once in a while, but if you're on like a year, if you're like trading a year, and you're in a bull market or a bear market, doesn't matter. You can see, where you like stop getting long, start getting short, or at least get long on vol, right? And see it back here, right? We can also make some other assumptions here. We can take this bad boy right here, can't we? Start at least looking for something like this. We can call that the start thinking about getting short line, right? See it right there? So we got the get short line right here. Then we got the start thinking about getting short line. Or at least long vol, right? Yeah, maybe it grinds around down here, but it's going up, right? Yeah, maybe it grinds around down here, but it's going up, right? In this case here, you're getting long vol, and it winded up going up, right? So this line right here is important, isn't it?
That's 11.
We tag that line. You start thinking about volatility, not necessarily the S&P 500 going down.
Of 2.9.
Just volatility. Bunch of fucking savages. What else can we look at here? So we had some targets yesterday, and we have a target of $20, I think, at minimum. Let's take a look at some of this stuff here. We got that right there, right? Worked here, worked here, worked here. But yeah, but it's descending, Cap. It's going to moon over here. That might be the case, but for right now, let's look for a target of, maybe up here, $20. And we'll check the market. Check the market to see, like what's market conditions, where's price on SPY, that kind of stuff. What if we roll down here? What if VIX rolls down, right? Yeah, all right, we'll look at it down here too, right? Look at it down here as well. For right now, look for this. I'm sure some of you vol traders are like, oh, bro, we're going up here. Yeah, we'll take that trade when we get there. If we can get volatility higher, yeah, we'll talk about getting long vol in here, right? You'd want to see the break above, consolidation, the new high, and then slam the buy button on volatility to take that trade higher, right? So you're like, I got my first thing right here, Cap. I got my second leg of vol right here, Cap, like there, right? And you got this area, then you got that area. We ain't there yet either. You're not just getting long volatility and saying we're going to $60. Had you done that, you get fucked up in here, 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 you get fucked up right here, you get fucked up right here, and maybe you get fucked up right here. It's a lot of fucked upness, isn't it? 1, 2, 3, 4, 5, 6. Yeah. 6 losses. That doesn't really it's not really conducive to what? To money, is it? Yeah, it's not. We already know that. It ain't. Nice little back test here. Cooled off the vol. See if we can get volatility up and get price down now on SPY. Down to that SPX down here. Maybe we're already rolling. Maybe we can get SPOOs to roll down here and sweep those legs to go higher. We can get the VIX 9-day up like $20 and get down here in a meaningful way. Now I can put on some more goddamn call spreads down here. So I feel like I didn't put enough on for the end of the year. There we go. Back to that screen. Go back to that screen right there. Got a nice little squeeze here on the gamma flip. Nice little 15-minute trade. The 5-minute trigger. See if we can get down below, underneath. Right? And then maybe start making some trips down lower. Let's look at some other stuff here, too. I just want to check this really quick. Now, here's the pivot point right here. Now, we're on right now. We're good. Ugh.
That's 11:30 a.m. Eastern Time. The US sells $95 billion in 4-week bills. Prime
Shit.
4.7%.
I've got the Tingo. I have the Tingo key. I think I can get it right now. I fucked that up. Tingo. Give me 1 second, guys. I got to take care of something. I don't know.
Shortly expecting the results of the 4-week bill auction, I'll lead with the high yield.
I gotta put my thing on really quick because I don't want my stuff glaring here. Hold on. I'm still here with you guys. Give me a minute here. All right, now what the fuck am I looking for here? Ooh. on. Let me
Four spot 65%, 4.65% with a bid to cover ratio of 2.83, 2.83. So the US sells $95 billion in 4-week bills and awards 79.2% of bids at high.
what the fuck is going on with this? Spoo's still parked on Gamma Flip. Also note here that well, quick question or quick things here. Sorry, I got some stuff I got to do in the background here. This is also the gap fill. And note that this is a straight drop right here. Sorry. No gamma. Gap fill is here. That's the gap fill. And there ain't shit. There ain't nothing. Hold on a second here. I'll draw this shit out with crayons. Maybe that helps. That looks pretty good right there. Does that work? I don't know if that works. Sorry. If we weave through this, if we like blast down here and then weave through there, I'll be fucking stoked. Let me go up there. That looks terrible. Also note in here, S1 is down below here. We haven't even have we even fucking tagged? We haven't even actually tagged the daily trigger. You see that shit? We didn't even get down here. God damn it! Like we haven't even touched the goddamn daily trigger yet. Ugh. Ugh. Fucking infuriating. Like, we haven't even we technically haven't even had a pullback yet. I do remember changing them recently. What else do I need to do? Oh, fuck face, dude. I don't do any of that Facebook shit. I should probably do Facebook, though. I've got my Jim James Facebook. I don't think anyone's ever been there. I never go to fucking Facebook. Like, I use this shit for... What's going on here? Who the fuck uses Facebook? Do any of you guys out there use Facebook for anything other than like family or marketplace? I don't use Facebook for anything.
So ECB's McLuth says policy should remain prudent and cautious, and we would need powerful data for big rate cuts. And monetary policy can't solve all economic issues.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
That gap. That's what that gap is right there. Gap is right there. Gap's almost being closed here. Gap should be closed just a few moments.
So the S&P 500
Woo!
index falls to a
Come on down, baby. Where's that other? When was that? Yesterday? Let's see if I can put my thing back up. Sorry about that. Sorry, guys. I have some stuff I'm doing here in the background. I got Borks all over me. He's like, won't leave me alone. He's haranguing me. I'm being harangued by Joe, too. I've been being harangued by Joe for like 2 weeks. So I got an opportunity to take care of him right now. Take care of what I got to do. We should keep going lower. Let's go right down here and tag that. I'm going to buy some calls. Not yet, though. I want to get down here. I got call spreads, but I want to add more down here. We can get down here. Maybe some 0 dates, too. I got burned yesterday for like $5 fucking grand on 0 dates. I was pretty fucking angry. Not a happy camper. But I want to try to grab some more today down here. See if we can grab some. What? I mean documentation. I got to put my screen up again. Sorry, guys. need that. I don't need that. Okay. All right. Fucking. It's my current plan. Okay. Oh shit! I wasn't even watching. Sorry, guys. We're done. I think we might be done there. That might have been bottom right there.
Mac mortgage rate statistics for the U.S.
That might be it right there. And this is pretty fucking close to this. Is pretty close on SPY. Watch this really closely here. You see that? How close we got to that local support? That might be it right there. We're back on the pivot point again. That might be it. We might be done. Do we just keep sweep? Dude, I want to tell you. I want to show you guys something here. Give me a second. I gotta remove some stuff from my desktop. Hold on here. I want to talk about what just happened just here. I was talking to a buddy. I was talking to Binky. Was it Binky this morning? I don't think maybe Binky or something. But hold on. I want to show you guys something important here. Give me one quick second. You see that price action right there? You see this price action down here? So yesterday when we were down here, I wanted more down. I wanted to get underneath this daily trigger. And this is a bear trap. I didn't figure it out yesterday that it was a bear trap until after the close. And then I was thinking about it overnight. And this right here is another bear trap right here. God damn. This might be another bear trap right here. And I want to talk about it because why? I want to show you guys something important. You guys may or may not remember this stuff, but I never forget it. Yeah, supposedly this is Rocky. I want to show you guys something important here.
US 30-year fixed rate mortgages, 6.54%, October 24th week, the highest since August.
Dude, they're roping you all. I think they're roping you all, and I want to talk about why.
Prior week.
Do you guys remember? Oh, hold on here. Do you guys remember when we corrected back here? I think I might be the only person who remembers this stuff. Do you guys remember this correction right here? And I had who did I show you guys? I showed you guys a video of hold on a second. I got something for you to look up here. Do you remember this guy right here, Jack D. Schwager? Remember that guy right there? He put out a video. He put out a video on the first week of August. He was interviewed on YouTube by some YouTube channel. And they had a chart up. And there was nothing on the chart. The chart had nothing on it. It was just a blank chart. And the interviewer goes, what do you and we were like, at that time we were like no. At that time we had, God damn it. Yeah. Stop flashing it. All right. So at that time we were down here. And the guy asked him, it was in like August, first week of August. He goes, do you think we're gonna crash here? And Schwager goes, this was a bull trap. he goes, you see that wick right there? He goes, that was a bull trap. And the interviewer goes, how do you know that? He goes, had they blasted down here, the demand would have been gone. He goes, that wick shows that, that wick right here, he goes, that shows that they're going to trap all these fucking sellers in, and we're going to ramp it. He goes, and it's going to turn out really bad. He's like, it's going to go really, really, really high. And the thesis here, of course, is that that you've got the buyers right here, and you got these sellers right here, like big force of sellers. It's like big force of buyers. And had we broken down right here, we would have blasted down to like, 3,800 or something insane like that. And that wick right there to him, we didn't know anything else over here. We didn't know a goddamn thing. And I posted that Schwager interview on Twitter, and I think I posted it in the Discord or in a market brief. What ended up happening was this right here. That happened. That happened right there. So on a smaller frame, that same shit's going on right now. You can see it right here. You didn't get the fucking low, and they're doing it again right now. These fuckers are doing it again right now. That's a fucking trap right there. They're just buying. They're just buying. It's like buy, 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 buy. I got to go back to what I was doing. I apologize. They're literally just buying the fuck out of this. This is all like, I don't know who's doing the buying, but it's probably a bank. It's probably GS who's telling you that we're going to be 3% next year. They're lying to you. See that fucking shit right there? God damn. They just won't fucking stop. Just come on down. Come on down, bear baby. Don't turn around. Come on down. Look at that shit. Like, you know all these assholes are short. Like loading fucking puts up in here and shit. They're all short as fuck. They're just getting trapped in. I'll try to find that swagger in the background here. I'll try to find that swagger video. They're just like vacuum cleaners. Like, you'd think that demand would leave the market. Nope. Where is this? Where is this fucking thing? I got two videos here. There's one from 3 months ago. I think it's this one here. I don't know if it's that one. I think it's this one. There's a couple of them that I can see here. Let's do the most recent ones. Upload date. Jack D. Schwager. Mr. Schwager. He's got a shit ton of videos. This one was from like late August, early September. Can I find it in my search history maybe? That would put us 3 months ago, right? Right around roughly 3 months ago. Oh, it's this one right fucking here. I fucking found it. I fucking found it. Hold on here. I found it. 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 That was from in August. They're just roping you in and roping you in. I posted it in the Discord. These fuckers, they just buy, 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 buy. We need some change in sentiment. Says I've got a new one here. Where's the fucking documentation? I don't. Can I control F this shit? Really? Wait a minute. Ah. I pay a fuck ton of money for that shit. I don't even use it yet. Okay. All right. I need more data. Okay. Yeah, I have a commercial account though, so. Oh, okay. Oh, dude. I need that. Oh, that's what I gotta find out too. What do I need here? I need that data too. We gotta do that right now. RT. Financial data. RT Financial Solutions? Nope. Equity RT. Stock market data. No, I don't. I think that's it. RT reporting, finance. RT Financial Solutions. Equity RT. Pro Exec. RT.com. No. I need that one. I need that company. financial services. Services. Douche bank. Stock market. No. Specialized data solutions. Big data. Okay. Go on. Plans. Yeah. We need can you take a call? Let's keep on buying. Keep on fucking buying. Yeah, hot mic, don't I? Sorry about that, guys. Anyways, buyers stepping in here and here. I'm telling you guys don't have to listen to me. We this is the same story as always. The story never ends. Oh, story as old as time, baby. It's like a book that I have to fucking read every fucking month or two. I'll be back, you guys. Give me a minute.
Israeli military chiefs notes the possibility for a sharp conclusion to the conflict with Hezbollah in Lebanon.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
I'm getting yelled at by Bork right now, guys. Just a note that we have now returned back to the gamma flip. We are now positive again.
The Fed bids for 5-year tips total $404.8 million. So in 10 minutes' time now, at the top of the hour, the US is due to sell $24 billion in 5-year tips. The prior bid cover was 2.52, and the prior high yield was 2.05%. So today's $24 billion 5-year TIPS auction is the biggest tip sale to date, poised to draw the lowest auction yield in more than a year, as inflation-protected treasuries have outperformed since the Fed cut interest rates in mid-September. Tesla shares extending gains to 20% now, a session high. So in 5 minutes time now at the top of the hour. So excuse me, 5 minutes time now to the top of the hour. US due to sell $24 billion in 5-year tips. So the prior bid to cover was 2.52 and the prior high yield was 2.05%. Keep in mind as well at the top of the hour, we're expecting possible comments from ECB's Lane, who speaks at an event titled Inflation, Drivers and Dynamics. Shortly expecting the results of the 5-year tip sale, as well as comments from ECB's Lane. Keep in mind the pre-sale when issued yield is due at the top of the hour. The auction results normally follow a couple of minutes after this.
When issued, 5-year tips yield about 1.641% for the $24 billion auction.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
ECB's Lane says the disinflation process is well on track. Lane says inflation is set to hit 2% in the course of 2025. Two spot four, high yield, 1.67%, 1.67%. So the US sells $24 billion in 5-year notes and awards 72.6% of bids at high. Primary dealers take 7.89%, direct 17.35%, and indirect 74.76%. So ECB's Lane says services momentum remains high but is easing. So US Treasury 5-year tips yield trims losses after 5-year tips auction. Last down 3.2 basis points at 1.79%. ECB's Lane says recent surveys suggest wage growth is moderating. ECB's Muller says, I'm still confident we'll see a gradual recovery, and I'm not worried about falling behind the curve. The best policy choice is measured rate cuts.
Oh boy, there goes your high or low, huh? Second here. Sorry, I got some crap I'm doing here in the background. Oh, I gotta do that too, don't I? Oh, high or lows. There's a low, there's a high or low, and the stock market's crashing, right? Okay. All right. They're all trading 1 minute shit and
Shortly expecting the results of the Fed reverse repo operation.
they're all saying crash. It's a bear flag. Quadruple top. End of the market. Shit you not. It just never ends. Like I can't win. It's like you gotta let them go on parade for 5 minutes. you're like I'm just looking for a pullback. I get a pullback? Like that's it. It's all I want, a pullback. I was talking in the Discord earlier and I'm like, hold on a second, Eric. I'm talking in the Discord earlier and so it's like man, I know everybody's got their own ways of trading, right? Like I'll say something to this point too. Like I think it's fine to be like a long side or a short side trader. I got no problems with like if you like going short or long, or you can do both, or I don't know, you're like bull bear sexual. I don't care anything about that stuff, but the doomer stuff, I can't do it. I can't for a multitude of reasons. But I can't do that doomer shit. And like pullbacks to me are a bull's friend. It's a time for like, so my how I trade typically, not always, but typically is, I was talking about the Discord here, is it's not day trading. It's like if we get a major correction, right? I'm buying SPY every time. Like we get like a 5, 6, 7, 10% correction, anything like that. I literally buy the S&P 500. Even if we get down 10%, I'll buy it at a 10% drawdown, a 20% drawdown, even a 30% drawdown. I literally buy it. And then I sell options against it. That's like my main source of income.
53 counterparties take $202.798 billion at the Fed reverse repo operation.
My secondary source of income is if we get a pullback to the daily trigger, or we get a correction to the weekly trigger. I end up buying spreads that are 1 to 3 months out. That's what I do, and I make a lot of money, a ton of money, doing that. And even in a bear market, that is the way to make money. I know that's shocking to even say that, but if you look at every bear market we've ever had, we have seasonal lows that you can buy typically for a decent spread. Now, does it pay big money? No,
So
but it keeps you alive and it keeps you making money.
Retains key points from draft
Like
on
day trading, like intraday trading, 0 dates or 1 dates or even weeklies, that's all fine. But is it the way for you to make money in the market? No. It's not, shouldn't be anyone's like main source of income, unless I guess if you have a job and you just want to hit the lottery once a month or once every 2 or 3 months or something, you want to hit the lottery, that's fine too. But you're probably still working a job. That probably works for some people too. You have a career, and so I think everybody has their own trade plans, is my point. The only other thing I would say or comment on that would be, I was just talking about in the Discord, is that I can't get behind doomers. Like, and I gotta give you the thesis for this. In my life, I'm a happy person. I don't spend my time in my life angry, mad, or pissed off. Hold on here. Let me turn my camera on here. Oh, shit. God damn it, hit the wrong one. Like, I don't spend my life angry, mad, or I don't go to my wife and say everything is awful. To my kids, everything is awful. I'm like, let's go do something. Let's go out to eat. Let's have a party. Let's celebrate a holiday. Let's do all this stuff. And I don't have time for that. Like, I literally don't have time. I raise kids. I got a wife. I literally, my life is fucking awesome. Like, I got hot wife, cool kids. I got 2 dogs, got cats. Live in a cool place. I'm always looking up. I'm not from Detroit. I wasn't born and raised here. I didn't move here because I was looking for doom. I moved to Detroit because I'm like, that place is looking up. When I started buying properties here, guess why? It was doom and gloom. Everyone was dooming and glooming it. And I was like, oh, no. This shit's going to turn around. So that's how I live. So even if we're in a bear market, I'm not looking to like sell this market to like burning tires rolling down the street in Manhattan. I'm looking for a fucking turn. I'm looking to like buy the stock market cheaply. And I think that's the easy road, for me at least. And well, I was just on the phone with Bork a minute ago. I'm like, can you imagine? Like, I mean, I guess people love that shit. I got no hate towards it or ill will towards it. But I couldn't imagine sitting in a group of people, like friends, and all of us just sit there and talk about the fraud. As a matter of fact, I was reading an article last night from Wolf Richter. He put out a piece yesterday about the housing market. And inside of his discussion thread, here, let me read it to you. This is a perfect example here. I'm going to give you a perfect example here. Hold on here. Let me just show you exactly my point, because this is my point. Hold on here. What did Wolf say in here? Because I'm just like Wolf. I'm the same fucking way as this guy. What did he say in here? Well, let me see what he said. I thought it was hilarious. Did this guy delete his comments? Then Wolf, hold on. Hold on here. Oh, this. I guess this article got a ton of traction, huh? It didn't when it first came out. Let me see here. Oh, they deleted their comments. Shocker. Shocker. Someone commented on I don't see it in here. It was on here yesterday. I'm assuming that they deleted their commentary, but wait a minute. It might be here. Hold on, let me see if I can find it here. I'm not trying to throw whoever this poster is under the bus either. This is contextual. Let me see if I can find this here. Right here. I got it right here. And this is what I'm talking about here. So this guy here, his name's Megatron. You know, I'm the big bad guy, Megatron over here. Here's Megatron. And Megatron said, this was on T-bills and tightening, QT and stuff like that. And he goes, the Treasury's yields look interesting. We'll see what the private sector has to say about it as we enter a recessionary environment. Like, just look at that statement. Like, it's like the duration statement. It's like, we're going to enter a recession. And you've been hearing it and hearing it and hearing it and hearing it and hearing it. What does Wolf have to say? You're still hyping the recession. This has been going on for 2.5 years as GDP has been growing at a rate that's above the 10-year average, and people never tire of this recession palaver. So, like there it is right there. And I can't get behind it either. I can't trade that. Like, for me personally, I can't trade this. And I can't live my life with this either. I can't, like, if we go to a bear market, I can't even do it. I can't sit there and talk about stuff that's not going to happen. And I remember when we were in October of 2022, I had people come after me and they go, you might be right now. Or we bounced and started going higher, and people came back at me a second time and said, you might be right now, but we will be back and I will be able to get long then. Until then, I'm going to short this down into the depths of hell or some shit. And we just kept going up. And we did leave them behind. And you will leave that person or this person behind. You will leave that. And this person will continue with that nonsense. Or not that person, wrong person. This person over here will continue with that nonsense for the next 20 years. You're never gonna you're gonna constantly hear this, and it doesn't hold true. Even in 2022, I was asked, "What's your methodology here?" And we're going to talk about this here in a moment. This QT, and we're going to talk about the rising yields. More specifically today, I'm going to prove it to you today that rising yields do not mean market down. In a meaningful way. I'm going to prove it to you today with some help. I got somebody to help with it. So, but even when we were, where are we at? Is this SPX? Yeah, that's good. This will work. Let's look back in time here. Way back in time. When we were down here in October, my friends and I, this is Binky and Joe and all this, we were coming into this bottom in October, and I said, this is the bottom. And Mike Wilson was like, I remember it was like September or something, and he kept saying it into December. He was like, we have more down to go. We're not done. And he said 3,500.
You say long-term growth prospects.
And the reason why Mike Wilson had said 3,500 was because this is a normal crash or bear market. We usually go to the purple line. So he said, 3,500. And so I think we're trading 30. We're pretty close to it, right? I know he said 3,200, I think. We were at 3,500. I was like, we're like right there, man. So I'm like, what do you do here? And me and Joe and Binky and some other guys were all talking about it. And I was like, well, this is relevant to right now, where we are right now, on a smaller scale. So right now where we are, we're at what? We're in Q4, and we have the rest of the year ahead of us. We have the end of the year. We have the holiday rally. We have the end of the bull market, maybe. We have a bull run. We're in year 2. Maybe returns aren't as great in year 3, but we're still in a bull market. So I should be buying dips in the bull market on the daily trigger and the weekly trigger, at least with some spreads, with some time on it. And when you're coming down here for this turn, if you've been waiting to get long S&P 500 like SPY, I'm going to buy the SPY, actual stock. When we were here, I said, we'll do 30%. We'll do another 30%. And we'll do another 30% if we have to. And we still have 10% of our cash left over. By the way, this is not even recession. That's depression. That is fraudulent smart market like 2007, 2008. That's World War III, I kid you not. This right here, 2000 overpriced tech market. That's that line. And this is a normal, regular bear market crash. And when we did this, I even said, Ed, if we start to turn to the upside, any of this money that we didn't spend will start loading up. December, March, 30%, 30%, 30%. And people were saying, we'll be back down here again. And I'm like, no, dude, we're never coming back here again. We're never going to see this again. And you're getting long in here. And why are you getting long in here? You're getting long in here because you want the exposure in case you never come back here. You don't want to get left behind to go up. And we didn't make the new lows, did we? So if I had said, well, I want to wait to get long in case we go down here, we just keep going higher, I get left fucking behind. At least I got 30% on it down here. And I can go back here and add another 30 and another 30. Make sense? If we were to crash in December down here and go higher, I still have 70% of my money left over. So there's 30 there. Okay, we're going higher now. Oh, one more time down. There's another 30. Now I got this like sweet ass DCA at like 2,200 baller. And I'm selling puts the whole fucking way out of here. See you later, assholes. Whole way. Make sense? So now we're still in a bull market. And we haven't done shit, have we? But I do know one thing in a bull market to do. I know one thing to do. Call spreads. Call spreads. And buy S&P 500 right there. If I start seeing the daily trigger crossing the weekly trigger and I'm buying S&P 500, I'm probably not going to be buying S&P down here, am I? If I see the yellow line crossing the orange line, I'm probably not buying the S&P. If the yellow line and the orange line stay up here, I probably am buying the S&P 500, aren't I? So when you're in a bull market, you know, we're down here parked fucking around with the daily trigger, fucking around with the weekly trigger. Call spreads, call spreads, call spreads. And especially if you're buying them on the daily trigger. You're buying a call spread here. You're like, well, Cap, what if we go down to the weekly trigger? Hey, you just put extra time on them. Make sense? You don't date them for right here. You date them for over here. So you start getting long. Are you doing all your account on call spreads here? No. Are you doing 30%, 30%, 30% with 10 left over in cash? You goddamn right you do. If you were bouncing, we go higher, I put extra time in the call spread. If it fails and we go down, it's still going to go higher and print them. If I put 30% of money in call spreads with extra time on them and we do roll down, what do? Take another 30% of my bank and I get aggressive with it. I get jiggy with it. Make sense? Bam, 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 and start cranking. Now let's just say you're like, okay, Cap, you did 30 here and you did 30 here. What if we go down to the bottom, Cap? Well, it worked here, 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 here. Here, 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 here. If I lose one down here, I bet you that I still am rich. I still have 40% of my account, don't I? I did 30-30. My trading account, too. This isn't my wins. This is my trading account. I guess I'm going to buy the S&P 500 with that money that's left over in my trading account, aren't I? And sell puts to the suckers. Sorry. So terrible. Such a bad guy. The mean old man. Better living through being a bull. Okay, so you got a low, you got a higher low. That looks bearish, right? Low, higher low, super bearish. Hourly trigger's turning right now. See it? Have we lost the hourly trigger yet? No. Have we made the new low in the hourly trigger yet? No. All signs still pointing up. All signs still pointing up. Relentless buying, relentless bulls. If you're a bear, doomer bear, go back in the closet, get naked, take out the leather whip, turn the lights off, and start whipping yourself again. Just keep whipping yourself. You'll be right eventually, I promise. You'll have your day. Just like this guy from Wolf Richter who said that when the recession actually starts, he'll be right eventually. I don't know what to say to you guys. Like, I want to go down. Don't think I don't want to go down. I want to trade the weekly trigger. I'm just saying, like, we really need, we need these fucking FOMO bulls. Like, we literally need bulls buying like 6,100, 6,200, 6,300. Like, they got to start buying that shit. If they don't buy that shit, we ain't going down meaningfully. I assure you of it. We're going to fuck around and bounce around here until we can get the stupid sentiment. It's the fucking extreme bullishness. It's how it works. I drew something for you the other day on a brief. About 2 days ago, I had a brief, and I showed the gamma bars, and I had a green line that I drew a guy with a big brain, and I drew a green line in circles. And I'm like, I wonder if they're going to understand what this means. Well, it means that you need everybody fucking thinking we're going to 6,300. And you need everybody thinking we're going to, I don't know, fucking 55,000. Like, you need everybody trading that so that we don't go there. Does that make sense? You need everybody buying calls at 6,300 so that we can go down and trade 5,500. It's like this circle. The dealers just go back and forth, back and forth, back and forth. And now you got people out there talking fucking doom. Why are you talking doom? You're out of your fucking minds? Fuck. You talk doom, they're going to buy puts. You need these people buying fucking calls at 6,300. I don't want to call you morons, but like, you need people to be so fucking extremely bulled up that we will fucking roll. Meanwhile, you're out there in goddamn Twitter telling everybody we're going to crash. This is the top. Fucking A, man. Like, fucking million follower fucking bear. Start telling people we're going to 6,300. That way we can go down. Yeah, that counts, stretching walls. We need everybody bulled up. That's why I love when everybody's bared up. Like when everybody's like bared up, I'm like, oh fuck, time to go long. Like I need like extreme bullishness and I need extreme bearishness. Otherwise, this is the shit that we're gonna do. God. Ugh. Oh, dude. Yeah. Well, so Amar and Mary, I don't know if I'm pronouncing your name right. So, like, we're already pushing a narrative of being bulled up next year. Like, there's a whole narrative for it. I'm like, sweet. I'm like, get that fucking narrative going, because I'm kind of bared up next year. Like, there's a possibility that could extend this bull market, but you know, I ain't believing it personally. I'm not believing it. I think we got a crash ahead of us. Like I think March is going to be one of those things where, or that like that February, that seasonal low in springtime. I was talking to Binky a couple days ago, like last week. It was over the weekend. I was like, he's like, what are your thoughts on next year? Like truthfully, and I'm like, I'm kind of with GS, not GS Investments, but GS, but not committed to it. I'm always open to more bull market. But even so, like that 1995 to 2000 run, there's like a modified plan where most in a bull market like the last 2 years, you expect the daily and the weekly to be fucking bought more than it isn't. Like you can scratch it in fucking your forehead. They're going to buy the dip on the daily and they're going to buy the dip on the weekly. Just like with a knife, carve it in your forehead and say that to yourself. Until proven otherwise. Better living. They're going to buy the goddamn dip every time until it fails. That's what they're going to goddamn do. They're going to just like fucking throw money in the fucking furnace and they don't care. Now, next year, I will be more cautious. Like when we come into like March or February or whatever the fuck it is they do the seasonal low, if we roll down to like the weekly, this is to you, Amari, I'm going to be a little bit more like, maybe we go a little lower this time. Maybe we go to the monthly trigger. Maybe I want to see a turnaround first, right? Maybe we reclaim the daily trigger and daily trigger comes down and we reclaim it and get on that hourly trigger and all that shit. I'll get long. And then for like my expectations from there, like, are we going to all-time highs? Maybe not. Maybe I'll just take my winnings before we even get there and just, sit out of the market. Even if we go to all-time highs, just be happy with like a little bit more cautious on bottoms and a little bit more take the money and run rather than seeing trades through to the end. And I think that would fit if we went into a bear market or if we went into a sideways market. And I certainly wouldn't be losing if we went up and up and up and up, would I? So Binky and I were talking, and I said I would just execute more caution. Now, what about right now? What about right now? Should I execute caution right now? Fuck no. Fuck no. We're at the end of a fucking year we went vertical in. Hedge funds never fucking went long. Banks never went long. They're going to come into the end of this year. They're coming in this year and they got to show that they captured. They got like a fucking earth mover right now. And they're like, no, doom's coming. Meanwhile, they're just loading the fuck up right now. And when we come into December 31st and we're fucking vertical, you'll be over here dooming it up while they're going to max fucking gains. And they're going to go back to their managed money and say, oh, we made you all this money while these suckers thought that was the top of the market. I'm telling you, you take that fucking shit to the bank. Trading 579.49. You can't short Tesla. So I don't know if you know this. You can't short Tesla right now. You can't short him because yesterday we were looking at Tesla, and I was like, before the ER, I was like, yeah, I'm like bearish into the close, and then I'm bullish for their report. But I thought they were going to get trapped in at 230, 232, 230. That's what the options market was positioned for. And there were more option sellers than there were buyers yesterday. So everyone was selling calls and puts, or they were in flies or condors, wide spreads. And we went above that, didn't we? So right now, you're like your neighborhood's fucking option seller. You know why he's not here today? Because he's fucking up Schitt's Creek. So he's either chasing right now, or he's wandering an alleyway wondering if they're going to take his shit away from him. Or he's getting fucking margin called, depending on whatever they're doing. They got blown the fuck out. So that shit ain't coming down just yet. They're getting bent over right now. Look at that. That's fuck me. That's why that's going up right now. Yeah, they'll let him out. They'll let him out by like I got to look at the options chain. They'll let him out not before bending him over, though. This is why I hate trade. So I like selling options, but I used to trade like the wheel. I used to trade the wheel. Like I've done everything. Like I traded the wheel once for a while, and like I would make like 9 great trades for like 20-30%. And then of course I have to pay taxes on that. No one wants to tell you that, right? You got to pay taxes. And then I would have like 1 or 2 or 3 really bad fucking trades, and I wasn't beating the S&P 500 end of year. I wasn't beating it. I was like right around it, and I was working hard for it. And I was like, what the fuck am I doing? Like I look great on paper, but I wasn't getting like major hits. I wasn't making bank. I needed like 2 or 3 like baller trades, right? So I wasn't making enough money. I still sell options today. I haven't sold any options in a while. But every once in a while I'll sell options. I sold options on Nvda recently. That was pretty good. But like the extent of me selling options today is like owning something and selling something below and being okay with something being like an underlying being taken away from me and maybe not capturing some of the trade. Like I missed the trade. But like being like fucked up upside down, shit like that, like margined. Oh my God. I can't do that shit anymore. And I've never been that successful selling options. I think people do really well selling options. I suck at it. I'll be honest, or I'm not the greatest at it. Because my end of year performance is like I should have just bought fucking SPY. I need more than 20% a year. I do need it. Like my life needs more than 20% a year. 20% is not good enough for me. I'm not there yet financially either. Like I need millions, and I have millions. I'm actually. I just don't have millions in cash on me, but like free cash, like that I don't need for anything else. Like I don't have like I don't have 5, 10, $15 million and just floating cash fucking around doing nothing. Yeah, retirements, all that kind of shit, but it's all stuff that I can't just like do whatever I want with. So I don't have that money. Yeah, that's a whole nother goddamn conversation. Like, money is not free. Anyone that tells you that's lying. And anyone that tells you if you don't bring in more money that you'll be fine, that's a lie too. There's all kinds of fucking lies with money. Like having money is it's gone. It's gone. It goes faster than you think. You get like a one-time payout of $1 million. You think you're rock and roll. You're not. You know, pay off all your debt. You fucking have to keep making that money. It costs money to make money. Money gets cheaper too over time. It's like a constant fucking battle. It's a constant, never fucking stopping. Fucking have to make money. And then you do not stupid shit, but you accept. As a matter of fact, I got a story for you. I just went and bought not recently, but I'm not gonna tell you what I bought, but I bought some stuff. I got a project that I'm doing, and I bought some stuff, right? And some of it didn't meet my expectations. For me to return that stuff would have been a pain in the fucking ass, and I cannibalized some of what I needed to get what I wanted to make, and it cost me more than it should have. But I didn't care. I was like, oh, it cost me some money to do this. So like, I don't know. Anyways, trading the whale was hard. I worked hard for that money. So yeah, Tesla. They're not letting those fucking people out right now. They got the screws on them right now, and they have to long it. So if you were short Tesla, you are now long Tesla. I call them zombie bulls. They have to buy until the buying stops. And once the buying stops, you can get out. And just check the next expiry or two. And the next expiry or two, they'll let them out. Usually Tesla, it's like the next two expiries. Tesla or sell side, it's usually the nearest expiry, and then the next weekly expiry, they'll let you out or you get long. I don't know on the sell side. I'm going to assume it's the nearest expiry at least. That's not true either. I've got assets. I don't do that. Some people I've had financial advisors tell me that I'm not using my wealth properly. And that it's vanity what I'm doing. I disagree with that. 100%. I have a lot of money that I don't put to work. So like right now I own a house right now, and I own a piece of land right now. I just sold 3 properties. But I never mortgaged those out. I bought them with cash. As a matter of fact, I've had friends that not friends. I got into a real estate group. I almost posted this on Wolf Richter's blog post on housing market. I joined a real estate group. I want to say like 2000 between 2010 and 2014, somewhere in there. The real estate group had like 20, 30 members. Today it's got between 300 and 500 members, I think, somewhere in there. The original members of this group. Hang tight for a second. The original members of this group. This is a good lesson for you guys out there. So the original members of this group, right? We have a problem in our housing system today that was created by the reforms of the housing crash or bubble of 2007, 2008. We got a problem. What happened was we reformed. Now, it's not a full problem. Whenever you have a rule set, people will work their way around those rule sets to commit fraud or to take on too much risk or to expose themselves to downturns in the economy or different markets. Now, those guys that I originally met, right? 2007, 2008 kind of changed the rules. You couldn't just do a signature loan and buy 4 or 5 fucking houses and do whatever with it, right? I think that movie there, one of those fucking movies, when they were interviewing the dancer, that was like, I've got, 6 houses or something on a signature loan. I didn't have to tell anybody that I didn't have a job or something like that. You can't do that anymore. So what investors did, or someone that wanted to get into real estate investing, what they would do is they have these guys from like New York, around the world actually, California, South America, and there's like there's more groups from overseas, but basically these are wealthy people, and they're hard money lenders. And what changed was if you wanted to become an investor or a house flipper or a buy and holder, at that time period, there were not institutional, but large investors that were cycling out of the market. They had holdings of like 1 to 300 properties, buildings, stuff like that. And there were a lot of regulatory pressures coming into the housing market in the mid 2000s or 2010s, where let's say someone owns like an apartment building and they want to get rid, or a condo building. They want to get rid of condos, right? They're all owned by individuals. The building's owned by one guy. He wants to sell the building, right? Let's say it's got apartments in it, or he's got residential housing, triple deckers, condos with or duplexes and stuff like that. And there was like a bunch of reform in the mid 2010s, where like you had to do like lead abatement and lead remediation. And so these guys were making like 20%, 30%. A lot of these guys are making though like 30, and they started going down in their returns to like 20%. So we got this like new group of real estate investors came out in the 2010s, 2015, somewhere in there, and they started buying these properties from these original holders. Meanwhile, also a bunch of cities in the U.S. were in the shits, like Cleveland, Minneapolis, Detroit, some other places. And these cycles have been going on for decades. Like L.A., Santa Monica used to be a shithole. Boston was a shithole. New York was a shithole. So we go through these like cycles of housing and stuff anyways, right? Well, anyways. So there's a fundamental change, though, in the mid-10s, 2010s. And so people are turning to hard money lenders. And hard money lenders are fucking... You think the Senate's tough. Like a hard money lender is like, you got to bring some cash. These are your deadlines, and you got to put this fucker on the market, and you got to sell it and flip it. I'm going to take my money, take your money, and I'm going to fucking nail you for the points. If you can do 3 deals, I'll shave some points. If you can do 5 deals, like progressively, I'll put the points lower and lower and lower. But you're using my fucking money, right? Especially your first deal. They really put the fucking screws to you if you don't have a ton of money. So you have a class of housing flipper and investor that's put through like a combine. And that combine is brutal. And it's like a school of hard knocks. And those flippers you end up doing like your first deal, you don't have to pay the capital gains, so you make a bunch of money. Then you start paying capital gains, and you're like, fuck this, I'm not making enough money. I'm going to fucking start buying and holding. So you do like buy and holds. And a lot of these guys, not all of them, as that group grown, they branched off and did different things. And I'm going to tell you in a minute what I did versus what some of these guys did. Some of those guys branched off and they formed real estate investment groups where they take somebody like you, let's say you have 10 grand. And you over there, you've got 30 grand, and you over there, you get 80 grand. And I pool all your money together and we invest in apartment buildings and shit. That's dangerous. That's hella dangerous. On mortgages, very, very dangerous. Some of these guys stopped flipping and they started buying houses with the cash they made on the flips. And some of those people that did that would then remortgage those houses, especially when money was cheap. So you're doing flips, then you're doing buy and holds, and then you're still in a low rate environment. So what do? You remortgage that and take that money that's free and cheap and you reinvest it somewhere else. Money making money making money. So myself personally, and some of those money making money operations turned into the real estate investor groups, right? So now your mortgage that was cheap turned into a bad investment, and they're getting washed out right now. Right now, they're getting washed out all over the U.S. There's a lot of that going on right now, actually. So some of those guys did really well for the housing market. They did great. Millions and millions of dollars, but now, well, here we go, right back down again. Nice little flush. Watch out for the flush. So right now, let's look at some of those guys right now versus me. And we're going to talk about wealth and how the argument that it disappears. Because people say, oh no, when the economy crashes, wealth disappears. They can't escape it. That's not true. That's a lie. You're just told that by financial advisors and shit like that. Like that shit's in the news. There are wealthy people that stay wealthy no matter what. You got to find out what they do. So they hold is what they do. I'll just tell you, and they don't always leverage that money. Sometimes they do, but sometimes they don't. Because leverage also introduces risk. Say that again. Leverage also introduces risk. So, myself, like what I do is not recommended. So like what I do, and some of these guys are in trouble right now. Even in my own real estate group, there's like people that are now blowing up and shit because they took on new risk with that money and that wealth. What I do or did is I paid all my debt down. And I started buying this shit, and I paid for my own renovations. And I do shit myself. Like if I need a roof done, I always use this as an example. If I need a roof done, I will literally find the right tiles, but I'll get them cheap. I will drive 2 states away if I have to. I've never done that far, but I'll drive 60 miles and grab fucking 30 square in a U-Haul and bring them back for $20 a fucking square or $20 a bundle rather than 30 or 40. And I'll save the 2/3 of that money. I will hire my own fucking roofers, not a roofing company, and I will bid by the square for the tear off, the sheeting, and the install, and get the best fucking price. And I know how to put a fucking roof on because I put roofs on with other people that know how to do it. And I got my fucking work pants on and learned how to do it, what to look for, what's a good roof, what's a bad roof. So now when I buy a house, I buy them cheap as fuck. Cheap as fuck. Like right now in Detroit, you can't buy cheap housing anymore. Like a burned out shell in Detroit right now is like 30 grand minimum, 40 grand. Sometimes you can get them cheaper. It's not the norm though. I moved to Detroit. I'm buying houses for $1,500, $500, $3,500. Not cheap. Saving half on a renovation or a rehab, and then I'm holding it. And then instead of putting it into new risk for all that shit I did, I rent them out, put them on Airbnb, try to max profit on them, and Airbnb that shit. And it made me bank. Like it paid all my debt, all a bunch of garbage shit in my life, and robbing Peter to pay Paul with raising kids and being married and all that kind of stuff. But it's treated me really well. And not everybody that came out of 2008 made wrong decisions. And I like living like that. I like living where, like, I own a house right now that likely never gets taken away from me. No matter what. Like, I likely get to turn this house over to my kids, and say, here, you can have this forever. It's in a trust, and you can never sell it, and it will perpetually take care of itself. Like, I literally got a house that's got like, I got a house with like rental properties on it and stuff, or I got a property with rental properties on it, or a house that you can live in and on it and stuff like that. And it literally takes care of itself forever, no matter what. 100-year roof, that kind of stuff. And so, will I ever like mortgage it to leverage that money? Probably not. I'll leave it to my kids, and I'll leave that wealth to my kids, and hopefully it's protected the way it's structured, that it'll never be removed no matter what. Unless I guess maybe unless my bloodline ends or something like that, but at least working for that in my life, like things that I own, should be able to perpetually pay for themselves. This piece of land that I just bought, I want to do some timber harvesting on it if I can. Some kind of way to like generate money from it, so that it perpetually pays for itself over time. Like that kind of stuff. You can escape that shit. You can definitely escape that kind of shit. And anyways, that's my only point there and that stuff. The reason I'm bringing that up too, or the reason I'm circling around all this stuff, is because people tell you things and they're not fucking true. And if you're in the Discord right now, I'm gonna play. I know it's middle of the day right now, but I have the time. I'm in the middle of a bunch of meetings. I'm gonna play a couple videos for you inside of the Dungeons and Dragons voice chat. Hold on one second. I gotta take this call. My neighbor. Hold on. We got a bunch of construction going on. Hold on one second. All right, give me like 5 minutes. My neighbor's asking to borrow I own a drywall jack, so you can put drywall up on a ceiling, and he wants to borrow it. How am I keeping money married? I don't fucking know. You can't. You just got to make more money. You can't keep your money. You have to make more money. That's why the fucking wheel doesn't work for me. I wish it worked for me, but it doesn't. Give me 5 minutes. I'll be right back. I gotta let him into my my garage to grab it. Give me just 2 seconds here, guys. Just a note here that we were discussing options yesterday. We should trade like all-time highs by Friday close, just so you know. Apologize for that break. I want to say we trade 86, 84 or 86 by Friday. Where's the old man shit? Right there. We should trade like 5. I think we get all-time highs by the close, maybe. Like I'd like to see all-time highs by Friday close, like 4 p.m. I don't think they'll pay him though. I don't think they're gonna pay him. You got to get like 2 strikes under it. Yesterday I drew it out for you, right? In the stream, I drew out that you should get all-time highs, but they're gonna fuck with you between now and then. But before the weekends here, you should see it. Before, like at least by Friday. My assumption here is, I mean, they don't have to do it. I think I drew this for you yesterday, right? It's Friday. Could be on Monday, but you should if they're not going to sell tech earnings, you pretty much need that all-time high in Friday or Monday. I'll give you Monday, and then we'll come back in and range this shit. And if you get like a kick-ass, bunch of reports next week. I posted for you guys in a market brief that the market is fucking tits long for next week's earnings. Posted you a chart that showed that the market is long for week 3. Now they reset all of those options, but they're still long, right? They own fucking the underlying. So we'll line this up for next week. Hopefully we get enough great reports that we can trade that 5,900. Trigger the FOMO bullshit, and then we can actually roll to the downside in a meaningful way. Yeah, we'll see though. We could be wrong. Blood us. You still have to get above the hourly trigger here. So we still have to do that, and we still have to back test it too, which we haven't done yet. Bulls aren't out of the woods. Bears don't own this market. I can assure you of that. Bears do not own this market right now. This is a buy the dip market, and this is a buy the dip trade here. But the bulls aren't out of the woods. My assumption would be that we'd get the all-time high to stay alive. And then what you would do is you'd get the 5,900 during earnings week for week 3, and on the back test of the hourly trigger, we'll fail it. Wham! And then we'll start heading down. This is week 3, by the way. And if you also noticed in the brief last night, I talked to you about how DIA and smalls should be underperform next week, and maybe enter like an early correction. They can track S&P and Qs. That can happen too, but it's possible you get like the corrective moves in those indexes, and then they come back. They finish their corrections, then we come back and get their reports. And meanwhile, we take profit off of Qs, and S&P should like underperform, trade sideways during that whole process. Keep waiting. Green, I think we closed the fucking week at all-time highs. I'm not joking. You guys think I'm funny with it when I talk about this. I'm not serious. We always come back to this. This is like the same fucking. We tell this story. Read this book every time. Like, come on the show one morning and they got told, Cap, we're crashing. I'm like, what's that? You mean I can get long? No, Cap, we're crashing. Read the next 4 pages, dude. I'm in there reading the fucking pages, and I'm like, oh my God, these guys are fucking writing a goddamn book of doom. And then I come and say, look, dude, this is fake. That ain't happening. And then I get yelled at on stream for like 3 or 4 or 5 days. Then we're at all-time highs. And then you guys are like, I'm getting long, Cap. I'm very, very bulled up here, bro. Yeah, we're going higher. Yesterday would have known. Well, they still have a chance. I can't say that the Bears are out of it, but this pissed me off yesterday. I wanted to see that. I wanted to see like the bloodbath and the pin. Like I can show examples of it when we have corrected. I think we can correct. We didn't get it's a fucking bear trap. That's what it was. Right now it's a fucking bear trap. And that's what it is. We're not there yet. We're rotating. We're getting better prices, and this wipes out a bunch of call buyers for next week. So they have to rebuy again, which is what they're doing. Figures. Then you got Tesla mooning, so you got more like bulled up fucking bulls. So you know, go back, look at that brief. You'll see the positioning for. There's a brief, I think Sunday, Monday, Friday. I gave you a chart that showed how long everyone is for next week. Everyone's looking towards that week. So the options are reset. It's good. Tesla's options are reset. They mooned. I would expect the same thing to happen. Aapl traded its daily trigger yesterday. Looks like a beautiful reset for their earnings. A whole bunch of resets on tech yesterday. You want to see it? Hey, look at that. Pump, 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 pump. Bam. Parked, baby. Reset. Just enough room for Aapl to have a great ER and keep us tied into the market right now. And get some FOMOers in here, trigger the FOMOers, then they drop it. It's a beautiful setup right there. Fucking parked in its daily trigger. It's like the most bullish setup you can have. Back test the daily trigger, high or low, looking towards an event. It's a fucking beautiful thing. Capture fucking end of year. Capture, like, get your portfolio cranking. Bro, I bought Aapl at fucking 227 like 13 times end of the year. Made a bunch of money. It was awesome. Passing it all along to you as my client. All right. So I'm going to post on this talk that I've been having with you about how that guy, Mr. What was his name? Megatron. And how yields up doesn't equal market down. How we returned yesterday into the close and this morning's open to the consolidation range. How we have not shown a new low. How we have not broken down yet. I'm going to post a live video inside of the Dungeons and Dragons voice channel right now. Just give me like a few minutes here. I'm going to set it up. Some people were able to watch the latest video over Saturday. I'm going to play the video, the webinar before, and I'm going to play the most recent webinar following it because it lends some pretty decent insight into the end of Q4 and what the expectation would be. Where the most strength is. We can roll down, though, into like the 1st or 5th of November. There's weakness in the market. The market's not as supportive right now as it will be. And to get some context for when the market is supportive, so there's some tickers posted in there. Fascinatingly enough, too, like I think S-Bucks, Starbucks, and McDonald's were talked about being weak. But if you get that weakness, to buy it, because into the end of the year they're going to be strong as fuck. What if you guys want to take notes, get a piece of paper and a pencil or a crayon, notepad, phone pad, whatever you want. I'm going to have that up for you here in just a few minutes. There used to be, up until, I got a video for you here that goes through yields and inverted yield curves and duration. Ian Trade's talking about it right now. So the yield curve hasn't been predictive since, I think, 1980. So we were talking about GDP and stuff like that. There's reasons for it. You're touching on it right now. Ian Trades is touching on it. We had like a time period where we had no growth. And so we had like loose financial conditions to try to spark growth. And now we have some growth, which we haven't had in a long time. We have the threat of growth too, like Trump trade is involved in this. Hold on here. Like the uninverted version of the yield curve is not predictive of future price in the S&P 500. It's become less so as time has passed. Put that over there for you so you can see it. We closed the gap. No gamma. Bought the dip. Bought the dip. There's the buyers. 2 rounds of major buying now in the pullback on S&P 500. Goddamn buy the dippers. We need to change the goddamn sentiment out there. Fire these fucking bulls. Can I get this thing to start? I never said that, bro. I just said it was going to be a pullback, man. I never said correction. I never said this was the top. It was just the top for right now. Fucking $2 away from fucking all-time highs. I got washed out, bro. What do you mean you got washed out? $4 from all-time highs? You got to be fucking kidding me. I thought you wanted a pullback. You got your minds. There we go, right there. So if you want to watch that, if you want to watch a further explanation on that stuff, I've got 2 videos. One's 40 minutes, 5 minutes. The second one is the one that deals with yields, and yield curve and duration and uninversion of the yield curve, and how it's not to be taken on its own as an indicator of future performance in the S&P 500. It goes into explaining. Dude, what happened over here? Hold on a second here. What the hell's going on here? So I can get this shit spun up and ready to go. I don't have a link. I don't have a link for it to share. No. Can I do this? I don't know if I can. Maybe. I mean, I have another terminal set up with multi monitors. Maybe I'll have to do it somewhere else. Let's see if I can do it like this. I got a few programming notes I got to talk to you guys about here too. I'll put it. I'll if I can remember, I'll put it in the brief. I got a couple programming notes for you. First one would be that my daughter, my oldest daughter, is volunteering. For the election to count votes in the city in Wayne County in the city of Detroit, and there are crazy people that think that I don't know, that there's like fake voting going on. So I'm going to be volunteering with her because I'm afraid for her safety with the crazies. So on voting day on the 5th, I will not be. The stream will be up, but I won't be here for the voting day itself. I have to be with my daughter and make sure she's okay. She's not accosted by people. So I have that going on. And then on November 1st, I have a meeting with some developers. We're launching tools here like imminently. So I've got a meeting with developers on November 1st at 10 a.m. Stream will be up, but I won't be here. I don't know when I get back from that meeting. I could be back at like 12 or 4. Could be all day long. Might be 2 hours. I never know. That's November 1st. Today's the 24th. So like the 1st and the 5th. I have stuff to do for the website on the 1st, and then I got something I got to do with my kid no matter what. And then tomorrow the stream will be up, but I have another developer meeting. And I have a meeting, I think, to like roll out the mentorship program. So tomorrow I'll be here in the office with you for part of the day. I'll get you started and stuff, but I have meetings all morning. I apologize for that, but like tomorrow, tomorrow, the 1st and the 5th. Some other notes here too, just for future planning. I won't be here for Thanksgiving Friday. I think Thanksgiving's on Thursday, the 20. I got to put this in a fucking note. Let me see here. For Thanksgiving for November, it's on the 28th, the Thursday. I won't be here the 27th, 28th, and 29th. The markets are closed on the 28th. I don't know if they're open on the 29th. I haven't looked yet. But that Thanksgiving weekend, so 27th, 28th, 29th, I won't be here. The stream will be up, of course. And David AMS might be here to help you out, too. Hold on here. And then December. I don't know exactly when I'll be gone. So this year is kind of wonky. I celebrate secular Christmas in my family. So, look, it's the double. Check it out. So you got 1, 2, 3. You got First bear plane, the second bear plane, that can be bearish. I'm going to give you guys an outlook for tomorrow. Oh, you guys got the outlook basically from me. All-time highs Friday or Monday. Straight up that way. As long as they can murder the chain, straight up and to the right. They're not going to let any of these people out. Just so you know. Like, see these people right here? None of these people get let out alive. All their options are dead into Friday. As long as those options are dead, we'll go up there by Friday. Close Monday maybe at the latest. December for Christmas and New Year's, I'm going on a ski vacation for a couple weeks. I don't know what I'm going to do for that. I don't know if we should. I don't know how to do that right now. I got to plan that out. I don't know exactly what to do. How to work that. We've streamed I think we've missed one full day of streaming this year. I know that we've been late a couple times, but we've streamed every market day of the year except for one, I believe, like one full day. I think I've even gotten on after the market closed on those days, but we've streamed at least every single day. Maybe one we didn't. But I don't know exactly what to do in that December yet, or how to keep the stream up, or maybe I stream from where I'm going on vacation. But I am going on a Christmas vacation this year for, I believe, I want to say the 23rd until the 3rd. So it's almost 2 full weeks, like the week before the end of the year and the week after. Also note, too, is that I will have a lot of money on the market at that time period. So it's not like I won't be able to stream. I'll be trying to collect, hopefully, if the market goes up. If the market's going up at the end of the year, they do like the little squeezy thing where we just grind the whole way. But start thinking about that time of year. Last week of December, first week of January, some type of sabbatical. Be thinking about that yourself as well. You'll still get briefs. We'll have someone writing briefs for you. You'll still have the Discord and all that kind of stuff, and you'll have some kind of a stream up of some kind. But just note that there'll be less, more vacation time. If you're looking for a vacation, that we're taking it right around there. So just be aware of it. Yeah, it's the flat black double dong Harambe candle, brother. We're fucked. We're totally fucked. Here goes those buyers. They're right down here. Oh, look at I got it in black. It's double black dong. Well, it's green now. Let's see if we can get down there. What else? Let me try to get this set up. Oh, god damn it! It happened again. Oh, hold on here, boys and girls, gents. Come on now. I gotta move my crap. I gotta do this on a different. I should have did this in my other office. I don't know why I'm doing this here right now. I shouldn't be, but I am. Oh, shoot. Sorry about that. What happened? Apologize for that. Trying to get this video set up for you guys. Got like a bazillion things open. You guys can't see it, but I've got like a bunch of stuff going on here in the background. Oh, that's the other thing too. We got to end of month, don't we? Normally end of end of our OpEx, we went up, didn't we? I wonder if we'll go up for this end of month for the continuation trade. Usually it becomes whatever. If we go down into OpEx or up into OpEx, we typically continue on until end of month. What am I looking for here? I would be fascinated to see what happens in the end of month. Like, do we just like grind up? I gotta look at that. Here we go. Yeah, this came out on September 19th, so we're going to do 2 of them. There we go. All right, I'll be right back with you guys. Give me 1 second. I'm going to set this up in the Discord. I want to come over here so you guys can't hear that. I don't think you guys can hear this. Just watching this closely here. We are in just a couple notes here for the Bears. We have a succession of higher lows in hourly velocity, which is bullish. But we have declining daily velocities, velocity, which is bearish. It can improve. If we're going to roll, I still would like to see hourly come up and fail and make a new low, something like that. The reason I'm bringing this hourly velocity up is because it implies that currently it implies that when we test this, we'll break above it, though it is declining right now. So if the half an hour is strong and can send us down, keep sending us down, we can still go down from here. But if we are able to get above that half an hour trigger and this starts to turn up, price can come up here and test this, we should be able to get up there and start moving to the upside meaningfully. We're kind of like at a do or die spot for sellers at the moment. Let's see how it's coming down from above here. Now, the one thing I'll give to bears here is daily velo is weakening. That's not good for bulls. If sellers can hold this hourly trigger, we can go down more. And what's sketchy is that the daily trigger is getting weak. So if we do go to test that daily trigger, it won't hold. You get the point? If the daily trigger was on full negativity, minus 50, minus 25, minus 100, the daily trigger would likely hold if price was above it. But we have declining momentum on daily trigger at the moment, so we have to be very careful here if you are a bull. So that implies what? Market can trade higher and break through the hourly trigger, but if price were to decline, we would likely break right through that daily trigger. Weak, strong, weak and strong, or weak and weak, I should say. Both are weak right now. And where price is in between, that would mean that price can go higher because the hourly trigger is weak, and the price can go down And the implication behind that is if you've got a weak hourly trigger and a weak daily trigger, you can also see it in gamma. We have more gamma in the market, but the gamma is still not that strong, right? The downside gamma is kind of we also don't have upside gamma developed either. I want to buy some 0 dates if I can. $3.30. $3.04 power sour hour. I'll put the news squawker on now for you. We need some doom. We need like Korean War starting. Did you guys see the brick shit from this morning? You guys want to talk some doom? I was like, we need North Korea artillery shelling South Korea, nobody get hurt. Like, we need some realized volatility. We need something. We either need like realized volatility, not unrealized volatility, or we need bulls to feel safe. One or the other. We need one or the other. We need like sentiment change would work too, I guess. Sentiment change could work. Yeah, it's funny too. For right now where we are, it's fascinating to see that sentiment is different than fear. Sometimes they're confused. We confuse fear with sentiment, and sentiment is a fascinating thing. I read a bunch of books on sentiment, and I never used to believe it, but like Fed chairs will talk about sentiment. Big time traders talk about it. How if you can manipulate, the market will like self-realize. The market doesn't realize fear, but it does self-realize sentiment. Do you guys agree with that or no? Do you guys think that sentiment is more important than fear? Or I mean, I realize that you can you can trade unrealized volatility for profit, but not to where you expected it to go, right? You know what I mean? It's like if you're expecting, let's say, I don't know, you're expecting Iraq War 3. Like, I get that we can like have that unrealized volatility get priced in, and we can go down on that whether we get the war or not, like World War or Iraq War 3. But you don't get it to where you want to get it, right? Like to if that war actually popped off and we blood down 10% in a day or two. You get what I'm saying? Yeah, they are on pause, aren't they? I think they are. I think they're on pause. I think Iran has put it on pause. I was looking at the BRICS stuff. I got like my Main Street hat on, not my trader hat, but like my Main Street hat. The BRICS stuff is freaking me out. I'm looking at BRICS and I'm like, what the hell is it's like the axis of evil. I'm like, are we back in World War II again? Like, what is going? Like, how would you want to be? I mean, I can't tell if I'm just being brainwashed or propagandized, being American maybe. But I'm like looking at all like the leaders, and I'm like, dude, this is like a group of dictators. Like, it's like a group of dictators, and like a group of like super third world countries. I'm like, this looks so sketchy. This whole group. The only character that was missing. It literally looked like the Legion of fucking Doom. The only character that was missing was Kim Jong-il, because he's busy. Like, he's busy bringing troops over to Ukraine and Russia right now. I'm like, could you imagine being like, well, my partner over here, Kim Jong-il, he's part of my partnership, my coalition. I get that. I get that. I was in Iraq. And when I was in Iraq, the politics in Iraq are wild. Politics in Iraq are like familial, generational, and power and strength are a positive. It's not necessarily bad. It's just what it is. Like, so like you want like U.S. doesn't look towards that. We don't have that same, or right now we don't. But like, we're not like always looking for a dictator, right? We're like, we need a dictator right now. But and I want him to have like like, I don't know, 300 cousins. You know what I mean? Yeah, I know what they're doing. I get what they're doing too. I get bricks. I get belts. I like the belts and roads stuff. I understand all that. I understand like you're putting people in debt or nations in debt to build infrastructure. I also understand the logic of China becoming a middle class society, so you need a new manufacturing society. So you offload that work cheaper, which of course we benefit from too, right? Um, we're not the ones doing bricks though, either, are we? Like, or Belt and Road. We missed the belt. We missed the boat on that one, didn't we? I thought we missed the boat on Belts and Roads initiatives in Africa. Do you feel like we've missed that boat? I think we've missed it at this point. But it was like a who's who of like, you can't say. I mean, if you want to get the list out of some of these guys. I was looking at the list of people and I saw a picture and I was like, no. It's like, fuck no. Yeah, you can pretty much see like they destroyed like weekly call options. Now they're going to run it up, but not print any of the early week call options. Spreads are your friend here, by the way. Call spreads. I think I said it twice or three times earlier today and yesterday. Put on some call spreads. Put on some call spreads. This is your dip buy. We're going into tech earnings. They've reset the options market for the biggest week of earnings season. You're getting a second chance. Remember the last time they reset it? They reset it just a few weeks ago, didn't they? I thought they reset tech. This would be the second reset, wouldn't it? I think it's the second reset. Any opinions on Chinese stocks? I meant to look and I haven't had a chance. Oh, Baba, I gotta do. So I do have opinions. We looked at Yum Brands before it went moon with Hang Seng, and what I would recommend to you if you're going to trade China stocks is you do an overlay of, you can do a comparison with the Chinese S&P 500 and their tech, their version of Nasdaq with those stocks. Let's take a look at BABA really quick. Take a look at BABA. Let's take a peek. I'm looking at it down below. Hey, I was pretty right, huh? I was asked about this stock just a few weeks ago after the high. What did I think would happen here? And I said it'll go up and come down, and that's what it's done. Woo! Why did I say it would go up and come down? And where did I say it would go down to? And why and where it should go now? It's because of Hang Seng. The indexes in China give a better idea of how far we should pull back before we go higher. Had a target of 94.75. Let's take a peek and see. See if it's ready to turn up. I pretty much had it going 1, 2, and 3. Keep on going higher, Spoos. Keep on going, big boy. Keep on cranking, baby. I've heard crash. I've heard correction. I've heard major correction. I've heard what else? Doom. We're trading 579.50 right now. What else have I heard? I think I called it on Twitter. I said, what was his face there? What's his name? I said what's his face call? I didn't call. I said this guy's probably got the best take on this. He's a friend of the show too. I was like, he was calling for a pullback only, and I was like, I think he's right. Pullback is all we get. Figuring out money, Mike Da Silva. About a week ago, he said, I expect a pullback. He was like, I don't think we get the worst of the worst of the worst of the worst. So far, that's all it is, just pullback. I think this has a lot to do with gamma right now. It's all. I think this is all gamma driven. We don't have any meaningful we haven't triggered like sentiment change. We haven't triggered too much upside gamma. We triggered too much upside gamma. Just not the one that we're looking for. We did trigger 590. The one of the big problems right now, I talked about this in a brief about a week ago. One of the major problems right now at the market is that bulls are bullish, but they're reining in their bets. They're not so like bulls are trading like 580, 590, 580, 590, maybe 6,000. We need bulls to be trading like 610, 620, 630. Then we can pull back meaningfully. We can like have a correction. Right now, bulls don't believe we can trade over 6,000. Think about that. Like bulls right now basically think the top is 590 and we might trade 6,000 end of year. That's what they think. How many bulls do you know that think we're going to trade higher than that by end of year? Like, show them to me. And I don't mean like one person that you see on FinTwit or a bot account. Like, if you were to pull like FinTwit and just say, are we going to trade 62, 3, and 400 this year? Ask them that. Are we going to trade? Matter of fact, just ask the question. Ask this on FinTwit. You should do this for yourself. All of you should do this on FinTwit. Say, are we going to trade? Start a poll on FinTwit and go, are we going to trade above 6,200 by December 31st? And I guarantee you, no one will answer yes, we're trading above 40 or 6,200. So you need to change sentiment that we can trade above that, so that we expand call buying, so that we can move lower, believe it or not. Otherwise, we get stuck in this like back and forth, back and forth. We can change sentiment though. If we have like realized volatility, like really bad news, really bad reports, war would do it. If we actually kicked off like a war with Iran, or kicked off a war with Korea, we'd be down. We'd be down like 9-10%. And we can already see how antsy bulls are right now, right? Drop of a hat, bulls are gone. That would do it, right? You get real money selling in fear. That could send us lower too. But you know what I mean? Otherwise, you know what happens is they'll just grind us up into the end of the year. So they just won't. Here's like option 2 or 3.
U.S. money market.
We grind.
Assets rise to a record.
And we can even grind higher in price too, which would really suck. That's why I don't like trading December. We get like volatility. Like so, I think I've told you this before, but I want to warn you of this. Mark my words on this. If we can get a pullback to the daily trigger, which we just did, or if we get a pullback to the weekly trigger into the end of the year, and you're bullish, it behooves you to place a spread. And there's a reason for that. If we don't get that upside call expansion, we'll grind. And that grinding could take the form of big volatile moves, or just like checking back the 5-minute the whole way there. And let me tell it to you better. I have spent many Q4s, like right here at 75, and lose money the entire way up to 6,000 or 620. Like I just burn cash the whole way, and then like a December 31st, I just want to cry. I'm like, I should have just bought call spreads and sat back and chilled and watched the money fucking printer print. And as a matter of fact, I was looking at call spreads for end of the year yesterday and this morning, and I was looking for like 575, 6,000s, and but I was the bottom end, or 580s. I was looking at 580s and 620, 580s, 600, and 580s, 620s, and they don't pay a lot. Like they just don't pay a lot. They're just like, fuck you, bro. And I'm like, I can see what this is. Like that. I first have to put out like a $1,200 or something. No, $600 to make $1,200 on a full print. So I'm like the money I have to put out plus the payoff isn't that great. So I started like raising my strikes.
Arizona chip yield past Taiwan.
So I likely don't get paid until we get there. I could have done a credit spread, I guess, but it's almost a guaranteed. But I don't want to deal with the nightmare either. Like I don't want to deal with the nightmare of giving money back to the markets the whole way up there into December. And I've been waiting for this for like 5 weeks. I've been slowly exiting the market over the past 5 weeks, and been patient the last 5 weeks. And so we get the daily trigger right now, and I'm like, fuck yeah. And I don't know if we go down to the weekly. I'm open to it. My spread should be fine. I think my fatal flaw in my trade plan right now into the end of the year would be, if I had a fatal flaw on it, it's probably, and I've gotten caught in this before. I I have lost money, is significant
With the
money.
latest and be on the leading edge of news for
If we lower our
Today
expectations,
and get our
that's the
special
danger.
offer or financial use for a
Um,
year's worth of our
if you
service,
blast down deep
priced
enough,
1 month.
and they're like, you know what? We're never going to get to 620 or 600. We'll just take a Christmas rally or a holiday rally to, fucking 580 or something. And then my face melts off, and I'm like, I am so fucking not positioned for this. That's a problem. that's a major problem. Did you guys read any of the Wolf Richter stuff? Go and check out his housing stuff. It's been correcting. It's been correcting for months now. I told you that months ago it was starting, right? It's not public. And here's something else that's really cool. We had housing data already this week that was negative. And while they were assigning weakness to, I meant to bring this up to you guys. We've been having bad data. And that's really what's going on right now, I think. I think the weakness or the volatility is assigned to the danger in the housing market. There's some positive there, though, too. I was way more, I wasn't like housing crash worried, but I was worried about the stock market having a crash due to the housing market. If Trump, I'm not a Republican, by the way. I'm not. There is a scenario, though, where if Trump wins and there's a red sweep, some tariff stuff, GDP stuff, like it's this weird thing. Like even just the threat of tariffs can make companies panic that they need to get more workers. Anyways, there. If you institute just a quarter or a third of those tariffs, and then the freaky I think Trump's being serious with calling out the military. I don't think that's the way to do it. I think we need immigration reform, a serious immigration reform. I was listening to a podcast last night. I'll try to get it for you guys. I was listening to a podcast last night, and it's called "It Could Happen Here." And I'm on the 4th episode of this thing. It's called "It Could Happen Here" is the name of the podcast. The 4th episode was outstanding. The first 3 were okay, but the 4th one was very very pertinent to where the country is right now. And it talks about keeping the lines of communication open amongst people that social media and the news today is built for you to hate each other. When you have more in common than you likely think. And immigration is one of those things. I don't think there's anyone that doesn't want immigration reform. I think if you sat down and just talked to people, in this episode, if you guys ever want to watch this or listen to it, or not watch it, but listen to it, it's called "It Could Happen Here," season 1, episode 4. There it is. "It Could Happen Here," season 1, episode 4. Listen to the 4th episode from start to finish. I don't know if you need to watch or listen to the first 3. They might give you context, but just the 4th episode is outstanding. It's outstanding. And what made it great, 3:27 coming in the half an hour, we can get these fucking Robin Hooders out of here. Just a few minutes left. Get ready. So anyways, the point here is this. This immigration thing, to get that overhaul of an immigration in our country is hard. Our country's political system is built for change to be slow. What's going on here? Sorry about that. So it's hard for overhaul in this country of anything. Our country is built to move slowly. And I don't think you'd speak to anybody in this country that's like, oh, we want some reform, like an easy path for people that we need, an easy path to get in and leave and whatever, if they're here to work, even if it's a menial job. So anyways, the point here, though, isn't that. The point is that I think Trump is serious. If he's elected, he is going to like call out the military and try to round people up. He's stated that. Now, I don't know if the military will listen to him. Our military is process driven. The United States military does not react well to do this and do that and do this and do that. They need processes usually. And they go through processes oftentimes to carry out orders. Our military is fascinating. It's like they intentionally take people from around the country. They don't bring. You'll never see units. National Guard, you will, but not the regular military. You'll see people taken from all over the country. They don't, and they actually move people all the time too. If you get a promotion and stuff, there's no. A lot of countries don't do that. We do. So we don't have cronyism, favoring stuff like that, loyalty. To different people. Anyways, I'm not gonna go into it here, but you know who does that is our police do it. Border Patrol, ATF. Those are more direct policing agencies that can act without policy. The military can't. The military doesn't act well. Like Homeland Security does it well too. Homeland Security. Border Patrol, ATF, you can actually give them orders and they'll carry out what you want done quickly and without much or any fear of reprisal. So I don't think he's going to call it the military. I don't think that he can't. He might be able to. Well, I'm not saying that he can't. There are some rules saying that he can. But if you did that, theoretically, if you did that, if you rounded up illegal immigrants and you removed them from the United States, you would create this. You would create an environment of very low unemployment. Okay, is that? Hold on a second here. So, you could have this like cratering of unemployment quickly, which would mean that companies, even though you're creating inflation too, there's some really weird ramifications here. Like it's like too many, like a lot of wheels turning. You have like inflation being created from tariffs, right? But you also have very low unemployment, which in turn raises wages. So if you have a housing pullback and you have enough money to pay increased rates or higher rates or not cutting rates, it's this weird bull market, soft landing. We can still do QT runoff. We can still keep rates high. We don't need to cut rates, and people have more money. And then you've got like banks are going to make money off of this, so they benefit from this, keeping rates higher. The market shouldn't crash if rates stay higher. Sentiment should stay better. It's just really weird. It doesn't necessarily work, nor does it necessarily work in the long term. Depending upon what kind of trade wars you get into. There are some other triggers there too. You could create actual war with trade. Trade wars turn into war a lot. Actual war. There's pitfalls all along the way of this. It's bizarre. Like I keep looking at it and I'm like trying to figure out like the pitfalls in this or the benefits of it. And then the greed that's associated with it. So this is the gross part. You want to know the gross part? This is where it gets really disgusting. So if you removed illegal immigrants from the U.S. in general, and you rounded them up quickly, you would have like a burst of a very low unemployment rate. That would create almost immediate wage spiral to the upside. Theoretically, McDonald's would need to pay more to get a worker. If you had to pay more for that worker, that would mean that a McDonald's hamburger would be more expensive, even though they just told you they're not going to be more expensive, right? Theoretically, their profits will go up too, and theoretically be paid more to pay for those burgers. And something else crazy here would be you'd have other people trying to capture that money. The Fed would love to remove that money from the system. Banks would like to take that out of your pockets with rates, fees. Wouldn't be shocked to see like banking fees go higher. Wouldn't be shocked to see inflation rage. And we're coming into an inflation bottom this summer historically. You know, the big like Larry Williams things where he draws the big like, hey, this rate of, or this if you look over 20 years, this is how we do inflation. There's books on this too, by the way, that describe these phenomena. And then you got like greed kicking in alongside it. So maybe I'm Aapl, and I think I said this the other day, right? I'm Aapl, and I've been given a pass on my iPhone factory in China. My Foxconn factory is is producing phones that don't have to deal with some tariffs. Would I leave my phone price lower? Hell no, I'd price gouge you and make like double profits. It's like this really like gross. I don't know if it's gross or not. It reminds me of like Ronald Reagan years. Miami Vice comes to mind. Scarface, like just like excess. And who's going to get that money? What company is going to get that money? And how do I like? We're like, well, Cap, that's gross, Cap. Yeah, but if you owned Aapl, you'd be reaping the benefits of that. So when you see like traders or like fin twitters, some of them feign stupidity, but they're not. There's probably a lot of market participants, and I always wonder about that with this election. I think Bush had this thing where it was Bush, maybe I don't know if it's Bush, but they used to say it's taxes stupid. Voters care about that shit. Voters are greedy. Or America's greedy. They don't like paying taxes. I don't think they don't mind paying their share either. Or Democrats don't mind paying their share as long as it goes towards functional programming, or health and services or whatever. But they don't want it to go down a black hole. I don't think Republicans do either. I don't even think they're far off with each other. But people secretly will tell you one thing and do something completely different. That's the NIMBYism stuff too, right? Like I noticed that in my own party. Like you get like the NIMBYism, like I believe that everybody should have this and that. And you're like, okay, you want to move in the neighborhood with them? No. You want to move to Detroit? No. How about we bus our kids out to your suburb? No, can't have that. You know what I mean? Dave Chappelle points that stuff out sometimes. I like Dave Chappelle. Trying to get over the hourly trigger right now and turn price around to the upside into the weekend. I'm assuming that you're going to get a narrative out there. Here's the rest of it. You're going to get a narrative out there. Bears made money this week. We're giving it to the Bulls to clean up on Friday. You're going to get Bears out there telling it was just a hit and run, bro. We always knew it was going to go back to all-time highs again. What else? Can we get a correction? I don't know. I'd like one. I don't know we're going to get it, though. I don't know a bull that doesn't want a correction, honestly. Like someone with money. People with money want a fucking correction. Is it going to happen, though, is a reality. Are you positioned for it? Hopefully you're not. Oh, they did that here too, Nino. Yeah, they do that here in Detroit too. They do that here. They like don't want the light rail lines going out to the suburbs here. Like what? Yeah, I'm with you, Nino, on that. I don't know if Trump wins it though either. I wonder. My other thing too here is, I wonder if he loses, or there is no red wave and he loses, or like right now everything is priced in for a red sweep. If that doesn't happen, what's that unwind look like? Like, I'll be asking you guys. If we did not get a red sweep, would there be an unwind? Would that whole trade unwind? If you got, I don't know, Trump with Democratic Senate, I don't think you're ever going to get a Democratic House of Reps right now. Too much gerrymandering going on the local level. Let me ask you that question. Let's say Kamala won, and you got a gridlocked Senate. Let's just say you got a gridlocked Senate. Kamala Harris wins. Is there a major unwind trade? Would be a rotation. Let me posit a second question to you. I always think about this stuff. So,
protect your trades from pro headline risk with Financial Juice Pro.
Would TLT moon? It would moon. Initially, it would moon. That's a good answer. No, it wouldn't. It wouldn't go to like all-time highs. She's expected to spend money, just not as much as Trump. But yes, you would likely see TLT go straight vertical. And I don't mean like all-time highs, but you'd probably get a good 3, 4, 5 day run on TLT. Yes, that's a good one. I like that one. I think that some stocks would go down. I think like I think a lot of Tesla bulls disagree with me on this. I think Tesla is tied to Trump winning. That trade has been set in some kind of stone. And I also think they enjoy that trade too. If you get a red sweep, I think Tesla will continue higher. Talked about that yesterday. Bulls don't believe that shit. They're like, it's this and that, it's robotics and whatever. I do think though that if Tesla could go down in a meaningful way if Trump loses, and I got some other concerns out there too, like Apple. I would have some concerns with now that stuff's public. I think Apple moons if Trump becomes president as well. I'm pretty bulled up on Apple. Apple getting taken down yesterday. I think, is positioning for that Trump presidency to get long. That's what it looks like to me, to get long on a Trump presidency. I haven't looked too much into it yet. I've been dabbling and thinking about the unwind of that trade. I gotta write it out so that we're aware of it, because we're getting closer, aren't we? I gotta have to at least be aware of the potential there. I don't know if it'd be immediate too. The other thing about that unwind is you might see a squeeze or a bottom, depending upon that unwind. Let's say you had like a Tesla unwind. Maybe it squeezes on the loss immediately, but for liquidity to short down to the hole. So be careful when you go, if you're taking whatever opposite trade you're taking, long or short, be careful of like a liquidity grab in whatever direction that is. There's some stuff with energy trades, EV trades. If Kamala wins, Nino's here. Kamala wins. Rivian, moon. Straight moon. Rivian should moon. As a matter of fact, if you see Rivian mooning at any point, that could be implying that the Trump trade's overdone. I haven't looked at Rivian recently, but yeah, moon, like vertical. Rivian would go vertical. I haven't even looked. Let me check right now. This could actually help us with figuring out if Tesla trade is based on merit or not. Yeah, see this right here? They got a little bump in here. So see how Rivian got a little EV bump here, but not a major one? This backs up my opinion that the Tesla trade is tied to the election. Pay very close attention to the election. If Kamala wins, I would be fascinated to see the reaction of Rivian versus Tesla. I would be fascinated, because you could make a theoretical argument that not only is Tesla squeezing because of their ER, but more importantly that they're pricing in Tesla to a Trump win. I hate that politics or not hate, but it's weird because like I don't do much pricing in of politics. Only with Trump for some reason do I price a lot of stuff in. Like even Biden, I'll only tune into Biden speaking if I know in advance that it's something that could move the markets. I'll tune in. I'll tune in here on the show too, and I'll play Biden, but only if there's an implication that it could matter. I feel like if Trump were to win, that we would be doing a lot of Trump shit. It would be a focal point. If Trump, and I think Trump's that kind of guy too. Like, I think he's the kind of guy where you have to monitor his social media more closely. Becomes like I would have it open on my desk all day long, and then also any pressers that are in and around opening and closes of the market. Hold on a second, I gotta check this thing.
1 minute till we get the market on close imbalance. Market on close imbalance. The S&P 500 a sell side of 782 million. The Nasdaq 100 a sell side of 420 million. The Dow 30 a sell side of 73 million, and the Magnificent 7 a buy side of 77.5 million.
I think you guys can hear this in the background. Let me turn my microphone around here so you can't hear him speaking in the background. Any of you yield curve bears want to be watching that? He talks about the Larry talks about like the perma bear or the doom bears that you're selling you a story. I love it. All right, so some expectations for tomorrow. We're going to go over those one more time. I'm going to give you guys a snap a line for you. We're going to chat about what to expect tomorrow. It's 3:53. Let's go over to the trigger screen. And remove all the drawings there. Get rid of that one right there. How do I? There we go. Go to an hourly basis. Note two important things here. There's two sell spots above. There's this one right here. And I want to talk to you about the importance of this one right here. This one's pretty important. You could make that red. We're going to chat about why right now. We can break above it too, but now there are some mechanical issues here. We're heading into a very busy week. We're coming into so next week, right? For next week preview, we have one of the busiest weeks in the equity market. Now, you're automatically not going to expect price to go to 590 into next week. That's the prize, though, isn't it? That's the prize up there, right? Now there's some other not issues, but the basis here would be that we trade this into next week for big earnings, right? And they're not going to allow you out of here unless we get some like monster ERs to go up there and then you like trigger big call buying. We roll down, okay? And there's something important here. We had a call wall that was at 5,900. The target was 5,900. This was the call wall. If you look on the SPX Gamma as of today, the call wall is dropped. It was up here. Now it's down here. And where is that call wall? Right there. And we also have a gap to fill up here, don't we? Got that gap kicking around. And so I want you to think about like the approach up here. Failing that approach because of the call wall. And then even if we get up here, all this stuff is going to try to sell you and keep you pinned in here for earnings next week. And also, it's the call wall. So you really need good earnings to even send you back up here to get the call wall raised again and get some more upside development. Oh, sorry, the call wall is at 5,900. Excuse me. No, it's right here. For right now, it's right here. That's not strong enough yet. Now, if you can break price above here, if we can break above that resistance, we can then talk about moving the call wall higher. There's 57 million right here, and there's 59 million right here, and then 29 million right here. And now this is now top of the market. Notice how 6,000 is gone. This was here. This was a top of the market, and this right here was your call wall. Now it's lower. It's like down here somewhere. And now this has come down. And this is more like this right here, like a yellow bar. You want to visualize it. You can come up here, right? If you can break above, then we can talk about there. Make sense? And we can't talk about getting above this. If we had 6,000 up there, we can talk about breaking above at least, not rejecting. So there's like some mechanic things here that are a problem. Now we can develop that call gamma above again, but for right now, no. So the thing you should be focused on as a trader. Oh shit! Should have left that on. The thing you should be focusing on as a trader right now is mostly this wall right here. It's pretty strong for what we have for gamma right now. So just going back to that trigger screen really quick. That translates to right there. There's a red bar right there. So if we're kind of range bound, here's Friday, 1600. Here's Monday, open, I guess, 9 a.m. I would expect that at a minimum, we trade up into right there. The way is higher. And also you would expect a sell off of that line right there. There's your hourly trigger. And then we start fighting that stuff on reports next week. Can we trigger the 5,900? Sure. I would be really wary after this week, this upcoming week. So not this week, but next week. We have a lot of data coming out next week. We have potentially volatile data coming out next week. Now, we did front run some of that volatility this week, but we have a bunch of data that can move markets lower. And we got a bunch of like events and stuff around the 1st and 3rd and 5th. We got election. We've got some Fed stuff. We got a bunch of data. And we also have we have overhang stuff. So you could see get us through all that stuff, get us up there. And then you have the exuberance, like they could run the bullshit that, oh, look, everything is past us. The data's all good. Election is over. Everybody's happy, clapping their hands. And that could trigger the call buying at 6,300 for end of year. And that's when we get the actual correction. Hold on, I gotta give me 1 second here. Hold on a second, guys. Hey, I got to let you guys go here. I have an emergency going on with my wife. You get the gist, though, right? Up here, into the weekend, back down. Way is higher right now. If you're a bear and you're looking for corrective moves right now, like you were yesterday, you need to get underneath. You needed to get underneath yesterday, which you did not. Underneath, you did not. You need an event-driven or a report-driven this time and get a new low at least below this. You get what I'm saying? I gotta run. I have an emergency going on right